All right, we are live. What's up, guys? Welcome to the First Year Podcast, man. We are here with Steve. We're going to be talking about accounting, money, and how to save you guys on your taxes this year. Let's get into it.
Let's go.
All right, and we are live. What's up, guys? Welcome to the Fresh Year Podcast, man. It is Money Monday. We are here with Steve. As you guys know, every single Monday we do a Money Monday for the most part. Help you guys with getting your credit on point, real estate investing, cryptocurrency, stock market, index funds. We got to do another episode on index funds as well.
Yeah.
But Steve is our accountant, man. I love when we bring him on because we typically have cover a topic. So today's topic is going to be some new laws passed. That people can take advantage of. We're going to explain those laws to you guys when it comes to your taxes. And then we're going to open up the phone lines and answer a bunch of questions. And you guys will have access to our accountant so we can help you guys out. And I think we do have an offer as well for you guys to make some money.
Yeah. Also, we've known Steve from 2020, actually, back in the day.
Yeah.
We were just talking about that.
Yeah,
I said the first time I was on the show, you guys had only 22,000 subscribers. And look where you're at now. So,
yeah, it's crazy. It's crazy.
It's back at the Panorama.
Yeah. Yeah, that fucking bitch ass building. And everybody knows why they didn't want to fucking renew our shit.
Yeah.
But we'll just say that the owners are prefer kosher. Anyway, so we I guess Steve, we know who you are, but they might not. Can you introduce yourself real quick to people?
Absolutely. So I'm Steve from accounting, and I've got a large, not too big, but a CPA firm on the west coast of Florida, out of Sarasota. And I predominantly work with high net worth individuals, small, businesses, all different industries, construction, real estate, just a whole host of different industries, medical, doctors, practices, entrepreneurs and so forth. So I've been focused on that for about 25 years. And so, this is what I do. And I'm here. This is tax season. So I made the trip from the West Coast over here, and I'm just hoping to help your guys out, level up. I'm going to be talking about a few things. A lot of people don't know that the one big beautiful bill had a lot of good tax provisions in there for small business owners, and a lot of them that apply to your guys that are trying to get into business, start their own thing. So this is really a good topic.
Yeah, the media only focused on the ICE stuff and the deportations. It did not cover any of the financial stuff whatsoever. Mainstream media news did not cover any of the positive stuff for, if you're an entrepreneur or even if you're a regular, W-2 employee. There were lots of things in the Big Beautiful Bill that are very beneficial to you.
Yep, on purpose, by the way.
Probably the ones you heard about is, like no tax on tips, and then the overtime, no tax on the overtime stuff. So, I mean, there's a lot more for small business owners in here that are really important. So I'll touch upon those a little bit, the most that are most relevant to your audience. And then
because most of them are probably regular employees as well. Maybe you want to start a side business on the side. It's an aspiration.
Yeah. And then we'll talk about a little bit of bonus depreciation, which kind of folds into the cost seg. And I think there's a little bit of confusion out there with the cost seg stuff. When should you get a study done? When should you not get a study done? The benefits of that. And bonus depreciation came back because it was sunsetting. So that's another one that's now it's permanent. So that's huge for for the real estate investors that are looking to do that. We were talking a little bit about the bill that's going to be probably voted for here in Florida with the
real estate taxes.
The real estate taxes, yeah. So the average person probably it's going to get voted in. So that'll be on the ballot in November.
Ron DeSantis has been talking about that. No real estate in Florida, which is huge, man.
Yeah. So
bro,
I'm sure
you're killing me on those taxes, man.
It's going to help. Yeah, we need it. Because the mortgage rates are still up. Affordability is still an issue, and I think 60% of the population here in Florida is probably going to vote it in. We need a 2/3 or 3/5 vote.
It's ridiculous because you'll buy, especially the senior citizens, is hitting a lot of them because they'll move down here, buy a house. That house is appreciated in value, but they got to pay taxes on the value of the house now. And it's like, bro, I got this thing paid off. Why am I paying taxes on my own house? Like I'm paying the government to live in my house. This is bullshit.
Yeah, there was a story of an older lady that actually did that, and she lost her property to taxes because she couldn't pay it.
That's
Yeah,
crazy.
it's like what's the point?
She's in
What's the point?
retirement.
Yeah, what's the point of paying off
So
your
imagine
mortgage?
you work your whole life, your house is paid off, and obviously prices are going up,
Yeah.
inflation's going up, and then you can't pay your taxes, you lose your property.
Yeah,
Ridiculous.
So I think the average owner, I think
scary.
it'll probably reduce it for the actual. It's got to be a primary residence. It's got to be homesteaded, obviously.
Yeah.
So, like a 60% reduction in the.
so you're not for investment properties?
Not for investment
I'm
properties,
cooked.
unfortunately.
No,
I
man,
know.
no, man.
And
I'm
you've got
still
a lot
cooked.
of them
Yeah,
here in
never
Florida,
mind.
so I was thinking about
I got
that
excited
on
for
my
a
way
second. I
over.
was like, yes, but okay, so it's only.
What if
you
you
get it
live,
on your primary,
but what
though.
if you live in the property, like you live in
That's
it?
your primary. You can only have one homestead. Yeah.
Oh,
So unfortunately, yeah, they're not going to allow for two.
Well, I could do this condo, but other than that, yeah, I'm cooked.
which is the big one.
Yeah.
So that's
Because if you
that's
do
the
the
big
math,
one. Yeah.
if you lived in property versus taxes you got to pay at the end of the year, it just depends on what it is.
Yeah, everything's
Yeah.
gonna. Yeah, the equation changes all the time.
I mean, I
With
think
how much you owe, how much you had put down, all that other stuff.
Yeah.
Because most people only put down a small amount for their primary residence.
Yeah.
I think right now the market is the rates are still affecting affordability. So hopefully within the next year we get down to like the sixes or maybe if it dips down into fives in 2027. Hopefully, who knows? But it's
I'm not gonna lie though, Steve and Myron. I feel like we're in a place where like doom and gloom, bro. Like again, a property now is hard to get. Prices are going up. It's kind of like, bro, this is hard, man.
it is tough. Affordability is a huge issue right now. That's where I think that's going to be the driving force in the next election.
And it's only going to get
Yeah.
worse
Yeah.
in the next couple weeks.
2030.
Yeah.
Well,
And
I'm
then-
saying like.
Oh, yeah.
I think we're going to go to war, and that's
Oh,
gonna.
with
That's
Iran?
gonna.
You're talking about Iran?
Yeah.
Yeah, it's looking that way. They're kind of telegraphing it already.
Yeah.
They've been for since last year.
They've already. The price of a barrel of oil has already went up to like 60 something. It's
Has it
normally
really?
around 50.
Oh wow.
If he actually strikes Iran, which is going to probably be any day now, that's going to go up easily to $100 a barrel.
That's crazy. Yeah,
So you
and
guys are
I-
going to fill out the pump immediately.
And I think the oil from Venezuela, that's like very thick. It's more like for like roadways and other like. It's not really for refined for like
it's
fuel.
It's the oil that we use.
yeah.
Because it's like the really sludgy stuff that our refineries use. But the issue is that where Iran is strategically is right next to it's a place called Strait of Hormuz, which is like literally 20 to 30% of the world's oil goes through that part, through that strait. And a conflict there is pretty much going to shut that area down.
Yeah,
So
that'd be
like,
huge.
even though only about 12% of our oil goes through there, it's going to affect the rest of the world, which is
Right.
in turn going to affect us anyway.
The other prices,
Since we
yeah.
live in a globalized
It's a
world. So even though we don't
trickle
get
down,
a majority of our oil from over there, China does. China's a big trading partner. And then obviously conflicts always fuck the markets up. So yeah, oil prices are going to soar overnight.
Yeah, it's crazy. Unfortunately.
Yeah. And I think if I'm not mistaken, like if the world itself only has a roughly 2 to 3 months of reserve petroleum
Really?
in general.
Oh,
Yeah.
wow. Okay.
Like so even if we shut down that strait for a long ass time, the world only has roughly 2 to 3 months of
That's
oil
crazy.
in reserves in the
Yeah,
first
I
place.
wasn't
So
aware of that.
it's absolutely going to affect us no matter
Yeah.
what at some
Yeah.
point.
That's crazy.
Yeah.
Yeah. So then so I'll get into that, and then
Big beautiful bill.
So just like a few things on there, and then I'll wrap up with the Oh no, I wanted to talk about the new one. Is the crypto guys? I know crypto is really not. It got a little hot
It's down.
a few months ago. Now it's back down again, but it hasn't really been doing anything since 2022.
You see what Bitcoin
right?
is? I looked at it. It went like low 60K.
Yeah.
Right now it's sitting
Gold
at
is soaring.
yeah, gold is soaring.
So is Peter Schiff right? that's, that's the-
63K.
yeah.
And Ethereum is
So-
down to 1829. Wow.
Yeah. So that's crazy. Yeah. So we'll see.
Wow.
But okay, let's be honest here. It's gonna go
Buy
back
the
up.
dip. Buy the dip.
Bro,
Right.
I'm about
It's
to
gonna
buy
go
some
back up.
Ethereum right
Buy
now,
the
bro.
dip.
What
Yeah.
the hell? I haven't seen it this cheap in years.
Like Miguel would say, dollar cost average.
It's gonna go back up for sure.
So so there's the new form that came out, which is the 1099 DA that just started this year. People are gonna, we just talked about you got yours from Coinbase.
Yeah.
So that's an issue. I was planning on like this being more of an issue and more of a people seeking to get the information on this. So I wrote a book. So if you go to my Seeing Beyond the Numbers on Instagram, yeah, go to my bio and I've got some products in there, and that's one of them. People are not paying attention to it, but you're going to get a 1099 that only really shows the proceeds. It might have cost basis on there. The problem is, like we talked about, you're fine because you got on Coinbase and you stood on Coinbase, you did all your training, and then you onboarded on Coinbase from your legacy bank, and you offboarded. So all your transactions are captured there. The problem is a lot of people, they go and they get on Coinbase and then they move that to another chain. Maybe they went to Pulse chain. Maybe they went to, put some stuff in the MetaMask. Maybe they went to Solana. The problem is Coinbase is not capturing both sides of the transaction, and that's a huge issue. Crypto's down, but you still want to report it, because if you report the proper cost basis, and there's a way to do that. And my book shows, if you have a question about it, because you're going to have to educate your CPA on this. The average CPA has no clue. They don't know. So you're going to have to educate them. And if you're a savvy crypto guy, you're going to want to be able to download my book. It walks you through step by step very clearly. And that's what I wrote it for. So you're going to have this issue. You want to claim those losses, because you could carry those losses forward. And then when crypto goes back up, maybe it's going to go to 120 again, and then you're going to be in a gain position. The problem is, if you don't recognize those losses now, you're not going to have the opportunity to offset.
And to be clear, this is when you actually pull out from Coinbase, right?
Correct.
This triggers when you actually pull.
There's a lot of nuances to it. So the problem is there's multi-chains on there. So not everything, when you get on Coinbase, everybody thinks, okay, you stood on there, maybe you did. Yeah. But a lot of people, they move their assets off and they move them to other
cold storage
chains.
Wallet, whatever, yeah.
Yeah. Yep. And then Coinbase doesn't capture all that. You're going to get 1099 from. So let's say, for instance, real quick example, you get on Coinbase, you buy some Ethereum, right? You buy some Ethereum, you buy $100,000 worth of it. Mm-hmm. You move it over to the MetaMask, you trade it for some other coins, and you bring it back, and you bring back the Ethereum again, and it's at $50,000, right? Coinbase is not going to capture that. It's going to capture it differently, because it doesn't know all the other transactions you have from the other one. So there's some good software that captures all of the transactions. You could put all your wallets in there from all the different chains, but it doesn't do a perfect job. You got to really pay attention to the cost basis, and some of them the software does not catch. So my book talks about that stuff and how to treat it. There's also different types of transactions. You got interest on there, when you're getting paid rewards, if you're staking. There's a lot of different nuances to it. So anyway, so I want to talk about that. That's a 1099 DA, and it stands for digital assets, and that's coming out this year. So people are going to get these forms. You're going to give it to your accountant. Your accountant's not going to know what to do with it. So that's something that I have a resource for you guys on that. And then I'll wrap up with the R&D stuff, which is an exclusive offer for your guys, for the CEO Network guys, and for the OSS guys. Mm-hmm. So I wanted to put that out there.
Make some money, man.
I want a club as well.
Yeah. So I started a new company for the R&D, because there's been kind of an expansion in this. That was, again, under the one big beautiful bill, and a lot of businesses qualify for this. For instance, like restaurants are a good target for it. If you change some menu items, if you change your cooking process, if you put a POS system, or if you have any type of, website with AI integration and stuff like that, a lot of small restaurants in your neighborhood qualify for this stuff, and there's substantial amounts of tax credits that they qualify for. So we have a company that I set up for it, and I'm looking for 20 motivated guys that we could bring on, train them.
Cost them nothing. They get free training, and they can make some money.
I'm pretty good at identifying some pretty good talent. So I know your guys are, these guys are wanting to level up. So I want to invite them to come in. I want to start the first class with 20 guys. And I'm going to train them all personally myself with a couple of guys. I have my partners. We're going to provide all the tools that they need necessary, all the lists, all the flyers, all the education that they need to talk to clients in an articulate way to get them qualified. And there's nothing, this is something you go out, and we have the whole system set up where you go in and you follow it step by step, and you qualify a client, because this stuff has to be audit proof. So we're doing it from a CPA standpoint. We're not trying to do this from, we're not trying to just make commissions. It's got to be, we have to be able to, have a package ready, if the IRS should come back, where we can substantiate everything and have it hold.
Make it official.
Yeah.
All right.
So it's a good way for these guys to make money. So we'll wrap up with that and talk a little bit about that.
No, it's a good opportunity. Costs them nothing, and they get free training on that topic. All right. So let's go through it. So the first topic, what was the first thing you wanted to?
Big beautiful bill.
And guys, get your questions in now, and then, like I said, we're gonna open up phone lines at the end of the show. But we're gonna let Steve kind of run through his
So I'll go for the first one because I mean everybody in here. A lot of guys I'm always hearing that they want to talk about real estate. Again, I have a real estate book. I think it's like $17 or whatever, and it really walks you through to prepare you to bring all your stuff to your accountant at the end of the year to make sure you're doing things right. So go in there, download it, look at it. It's a quick read. But the bonus depreciation right now.
Can you tell them what depreciation is and then
absolutely
and then what bonus depreciation is because they might not understand.
So basically, when you buy a house, the house is typically most accountants they'll allocate a little bit for land. Let's say that you buy a $500,000 house, you have to depreciate it over time. So that means the house gets expensed not all in 1 year. You have to expense it over 27 and a half years.
If you have a 30-year mortgage, right?
That has nothing to do with the mortgage.
Oh, so, okay.
Has nothing to do with the mortgage. Right. No. So I buy a house. Let's say I buy a house cash, and I'm going to rent it out. I can rent it it becomes a business asset, right? So it's an income producing asset. So I can depreciate it. So I want to expense the $500,000, but I can't expense it all in 1 year. You have to be earning it.
You can't depreciate if you're living in it only.
Well, let's say I buy a house just to rent it.
Okay.
Okay. So it becomes, because you don't depreciate your primary residence.
That's
right?
what I meant. Yeah.
Yeah. So it's an investment. So I want to depreciate over time. So the government's IRS says, hey, you could depreciate it over 27 and a half years. Oh, and by the way, you can't depreciate the land. So I have to allocate $100,000 towards the land. Now I have $400,000 of costs that I have to depreciate over 27 and a half years. So a lot of guys do a cost segregation study. So they think, okay, I have to hire a firm. I have to get it professionally done. Some of these on the low end cost like $5,000 to get done. Some on the higher end maybe are 10 to 15 grand. So in my opinion, if you buy a $500,000 house, you don't really need to pay an engineering firm to do it. We did it to your properties. Your properties are all under a certain amount. You can get a good CPA that kind of knows what he's doing, and you can kind of estimate the cost of, how much the carpeting is, how much are the cabinets, so we could do a cost segregation, and you can segregate pieces of that house. So instead of just putting it all 400,000 over 27 and a half, we could take out 5-year assets. So that could be the carpets, that could be some of the floating floors, that could be the draperies, that could be the cabinets, things that are not structurally to the house.
And go ahead. Do you want to say something else?
So I'll put that in 5 years.
Gotcha.
So let's say I pull out 50 grand of those 5-year assets. Now I got 350. 50, I can deduct 100% of that under the bonus depreciation new rule. And then I can go to my 7-year assets. So that could be like the driveway, the fence. That could be other things on the outside of the home that you could depreciate quicker. You can accelerate those things, and you could depreciate those 100% of it in year 1.
So, and real quick, because I'll just so the audience really understands what you're saying here. So, guys, when you buy a house, right? Basically, what depreciation is like you're writing off the wear and tear that your house is going to experience over 27 and a half years, right? And the reason why he was saying we take a $500,000 house, the reason why it goes to 400 is because the government automatically assumes that 20% is going to be the land.
Correct.
So the other 80% is going to be the actual house. That's what you could depreciate over the 27 and a half years. So you got $500,000, I'll even go easier math. $100,000 house, right?
Yeah.
20% is automatically gone. So now you got that 80K that you can work with.
Correct.
Now you're going to basically go 27 and a half years over 80K. What is that per year?
Let's say $1,600.
$1,600 a year that you're going to save in taxes.
Right.
If you take that $100,000 house, 80% of it, that's the structure. 20% of the land, you can't depreciate land, guys. That's why buying land alone kind of sucks for tax benefits. So that 80% on the structure, then you depreciate that over 27 and a half years. That's $1,600 a year. And then on top of depreciation, you get another bite at the apple to lower your taxes, which is cost segregation. Which, think of cost segregation as like the brother of depreciation that's more aggressive, right?
Correct.
So cost segregation is another way to kind of limit your tax liability. That tends to be on a faster scale. So versus 27 and a half years, now it's 5 to 10 years, but it's on stuff that isn't structural. Like you said before,
Correct.
Things on the interior of the house, right?
Correct.
Which would be Give some examples.
Carpet and padding, cabinets that are like you can screw them out and remove them.
Kitchen fixes, right? Bathroom
light fixtures.
Yeah,
correct. Yeah, vanities, things of that nature. You could depreciate them quicker. So rather than getting like roughly a $2,000 deduction for depreciation, you can get maybe a $20,000 deduction, which is a huge. Then you offset that against the rental income.
So let me ask this then, just so that they fully have it. So let's say we take it for easy math purposes, even though you're never going to find a $100,000 house, right?
Yeah.
Now you take 20% remove, we got 80,000. So 27 and a half years, that's about 1,600 a year. Then we get a second bite at the apple with the cost segregation. Let's say we spend, make math easy, 10,000 on the interior of the house on the non-structural stuff, kitchen cabinets, whatever it may be, just for easy math. That 10K that we spent, can we deduct all of it, or
yes.
can we once, right?
That's what so now you can do 100% of it. So even that is quicker because that's a 5-year asset. So we should take 20% of it, right? Mm-hmm. But now, so under the new bill, you say no, you could take 100% of it in that 1 year.
Under Trump, big beautiful bill.
Correct.
So under other presidents, guys, it would have been that 10K you spent, you would have had to wait 5 years. So let's do the math again. $100,000 house, 20K is gone because of land. The government basically gives you 80K to use to depreciate. $1,600 per year. So you take that off. Then let's say you spend $10,000 fixing stuff inside that's not structural, right? The cabinets and everything else you mentioned. It's up to you. You could take that 10K and deduct it once for the year, limit your tax liability with the 1,600 plus the extra 10K, or you could do it over 5 years.
Correct.
And Trump is the one that basically put it in place where you could take that cost segregation and take all the benefits from it that first year if you want.
Correct.
Because other presidents would be like, okay, you can still, I don't want to use the word depreciate. You can still get the benefit, but it would be over 5 years versus 27 and a half years. So you basically cut more taxes in a shorter period of time. But Trump allowed it where, you know what? We could give you guys one up front where you take that full 10K off your taxes.
Correct.
If they want.
Yep. That's perfect way to explain it.
Yeah.
Better than I could.
Yeah. Give me ones if that makes sense for you guys. Because a lot of people get confused with the difference between depreciation and cost segregation. Even me, like I even forget some of the stuff. Like I was in my head, like, wait, can you get it? Can you still depreciate if if it's a 30-year fix? And it's like, no, even you buy cash. Yeah. Which now I'm like, yeah, you're right. And then,
but is it better to wait the years or do it right away at the very beginning?
It depends because you could have other rental properties
Yeah.
that are fully depreciated or just producing and they're cash flowing a lot better.
Yeah,
and you want more aggressive depreciation to offset against those others. This typically when you have multiple properties, it comes into play. But the main driving thing here, I want to make sure that you understand is that the with the bonus depreciation is or the cost segregation.
And that's only exclusive to Trump. Has any other president allowed that? Because I remember Trump.
Well, it came in. Yeah, it came in 2017. So that was under Trump. So this is all the renewals.
He's bringing it back.
Yeah. So they were all going to sunset. After his second term, hypothetically, and then he had that 4-year gap. So he got it all renewed again. Okay. So these are great.
I don't think any other president, like guys, if you're a real estate investor or like a business owner, Trump is very good for you.
That's huge.
Like from a small business, 90% of all business in America is small business.
Yeah.
So this is huge.
Lots of benefits for you if you're an entrepreneur. Sure.
Absolutely. Yeah, and then
or a real estate investor.
This is permanent. This is permanent because when we did the 2017 Jobs Cuts Act, it was sunsetting. So we had 100%, then it went to 80, then it went to 60, 40, 20, and it was going to sunset.
So people can
now it's 100%. It's permanent now.
Okay, so people can elect to either get that benefit over a 5-year split,
correct,
20% per year,
correct,
or take one upfront deduction. And I can see how you can use that strategically. Like, let's say, for example, guys, right? You're going to get taxed to hell this year, right? For other things, right? This is a good way to be like, you know what? I want to cut my tax liability from this angle, and then you could take all that upfront depreciation that year that you're getting taxed to kind of save.
And get an offset, yeah.
Yeah, get an offset. So that's a really good strategic tool that you have if you guys are going to, buy real estate. And this is why real estate's so good, because you could basically get 2 bites of the apple. You can use conventional depreciation over 27 and a half years. Then on top of that, you can add in cost segregation, and then you choose with the cost segregation if you want to do it over 5 years and do it nice slow burn. Or if
sometimes you don't need the massive deduction. And some of these, because it's a passive activity, rental is, you're limited on how much you can take on a loss. So you don't want that bonus depreciation to throw you in a huge loss. So there's ways around it. One of them, like one of the loopholes is going to be like to turn that property into, instead of having year leases, you could do like a short-term leases, like like Airbnb type of stuff. I know that's not as sexy anymore. But some people do, well with that stuff. So that turns that activity not into a passive activity. It turns it into a like a business, almost like an operating business. So whatever loss you incur, even if the bonus depreciation brings you into a loss and it's huge, you could take the full amount of it.
Is the goal essentially to get yourself to a part where you got losses? Because that would significantly decrease your liability.
But then you could carry those losses into the future. So that's okay. Even if you generate them in that first year and you get limited how much you can take, you could still carry it forward indefinitely. Okay. So, and then that'll offset future income, future profits.
Okay, so bonus depreciation is back, which is good, and it's here to stay this time.
Then the other big one, which is a real quick one, easy, is it's called QBI. That's qualified business income. So any business activity, S Corp, let's say, and you have a profit of $100,000, you get a 20% deduction. So you don't have to claim a $100,000 profit in your income tax return. You only claim $80,000. You get a 20%, whatever profit you have. So you made $200,000, you only claim $160,000. You get a 20% off the top deduction off your profit.
Yo, W Trump,
really?
And he made that permanent.
Yo, W Trump, man.
And that is, and see, it's crazy because no one ever talks about any of this shit. Because the Big Beautiful Bill was so big and comprehensive. Like, they only talked about immigration the whole time. And like no taxes on tips and bullshit like that. But all the other stuff, they didn't mention. So wait, okay, let me make sure I have that right. So you're saying, if you decide, if you want to be an entrepreneur, right now is like the best time to segue and get a side hustle.
Has been, but it was set to expire. So he got it renewed and it's permanent now.
So if you generate $100,000 or more, you get a free, I don't want to say free, but you basically get
$20,000 right off the bat.
$20K off automatically.
Correct. Yep.
So they're going to tax you as if you make $80K.
Correct.
Now, I'll say this real quick for the audience, because some of them might be like, well, Myron, what's the difference here? The difference, guys, is that like when you have, let's say make $100,000, but then they're only going to make you liable for 80, but you made 100. The reason why that's important is because it brings you into a different tax bracket.
Correct.
Yeah.
Right? If you're in a lower tax bracket, you get charged less for your taxes, even though you made more. You should be at the $100,000 range, but now you're at the 80 range, so you're saving a bunch on taxes, and that's the benefit of being liable for a smaller amount.
Yeah, we have a graduated tax. The more you make, the more the higher your effective tax rate is. Some people think that's unfair. They think we should go to the flat tax and make things easy. So
what's the magic number? I remember a couple of years ago, it seemed as though if you made like
it's like
85K or something like that.
As far as
more like normies, like there was one tax bracket, if I'm not mistaken, where if you made anything over like 85K, it was a significant jump.
Well, now it's like around 400,000. So once you get to that 400,000, there's a lot of provisions where they start to phase out. They call it like a phase out where you don't qualify for it anymore.
Okay.
So it's right around that phase, so it used to be like 150 for like single. So for family, it's like around $400,000.
I'm trying to think, like for a single person, there was like one tax bracket where you're like in a no man's land. You make enough to be
75,000. I think it was, that was like a few years back. I remember that.
You get what I'm saying?
Yeah, they've been playing with the rates. And in general, I think they went down even under this 2%, like pretty much across the board.
You're basically like what I call is like the no man's land, because like you're rich poor. It's like you're entry level luxury, but you're also like you don't make enough to like sustain that. So it's like and you get kind of burned from both ends because you make just enough to be considered upper middle class.
Correct.
But they're still taxing you significantly, and you don't make the amount of money that other people in your tax bracket making 100, 200K can sustain.
So I had a friend at my old job.
Yeah.
And we had unlimited overtime, right, at my old job. And the funny part is he would stop working to
avoid that no man's land.
I was like, why stop working? But it's because it'll fuck him up. Because again, he's gonna be in that no man's land where you can't make much money because you're getting taxed from all sides.
It's the worst place to be.
It jumps, it jumps exponentially higher, where it doesn't like it's a diminishing return. Basically, you call that.
Yeah, that's what it is. I don't know what the number is. I remember before it was like something 80K, but
I know exactly what you're talking about. Yeah. So there was
trying to figure out what that number is.
I was like, is this guy crazy? But then I thought about it.
Look it up.
It makes sense.
I think it was like 750, but that was a couple years ago.
Yeah.
Smart guy. But.
So we talked about the 1099-D. I think I kind of went into a lot about that. But then the other one was going to be we talked about cost segregation.
Yeah.
And then I'll just talk about the R&D stuff.
Yeah.
Okay. So this is, obviously this is for everybody, but I'm going to give preferential treatment to the guys that are in your group, right? So the CEO network guys and the OSS guys, they're going to get, so if I see that, their names come across and you put in there, and I think Mo, you're going to put the website I got set up for them, I think out there, the link. So if you go in there, just fill it out. And then what I'll do is I'll schedule it'll probably be myself or my partner, Darren, we'll do like a 15-minute Zoom call with you just to interview you. And then the next step, I'm trying to limit it to only 20 guys. And then we'll do a whole classroom training on Zoom with probably 10 guys and 10 guys. I'll probably split it up just because we're going to have a lot of questions. And I'm going to provide all the training, all the tools necessary, everything. I'm going to train you guys into, this is all free. And I'll tell you, I'll explain the whole R&D process, how to get people qualified. We have already enriched lists. I even have 700,000 CPAs throughout the whole United States and every single tax professionals, that is, because every tax professional, including myself, has to get what's called a PTIN number, and you have to register with the Internal Revenue Service. So I have that database list, and we've enriched it where you can actually reach out in your local jurisdiction to CPA offices. A lot of CPAs, they don't want to get into doing this stuff because they're busy doing tax work and doing other stuff. So you can walk in there. We'll give you I have like made up flyers and stuff and how to talk to them, because I'm a CPA, and I would listen, and you can just offer to them, say, hey, if you have clients that qualify for this, they understand what it is.
Yeah.
And, we'll pay you 5%. So, and then we're going to train these guys, our consultant guys, where you can actually take a business. Let's say it's a restaurant. Let's say you walk around and you just hit your neighborhood restaurant owners and you talk to them. A lot of these restaurants, they qualify and they don't even know they qualify because they're continually improving processes. They're changing menu items. They're, maybe putting a new point of sale system in there. Yeah. So all of these things that they're doing for their small business qualify for this tax credit. Now, what did the one big beautiful bill do that made this different is now instead of taking those costs and again, it's kind of like depreciation and spreading them out over many years, you can deduct it all in that 1 year. And we can go back 3 years and amend your returns, and I'm getting refunds. So I think one client, like my partner was talking to one guy, they got like 140,000. I'm working on one right now. It's a big construction company. It's probably going to be about, close to like $235,000 tax credit. So if you're going through that, if you go through the process with us, and I have another website which I'll reveal once you do the interview with us, we walk you through step by step. So you go through, you get the training, and then you go through and you could qualify a client, generate a questionnaire, figure out what processes and projects that they implemented, and then we can do the data collection, whether it's payroll reports or invoices and stuff like that to collect the data. My firm is in charge of putting all the numbers together and creating the actual forms that need to be sent into the IRS. So these consultants don't have to do it. They just have to identify the lead, walk them through, get them pre-qualified, identify the projects.
Ready to go.
And then we're paying them 20%. Once they get to a certain level, and you can see it right on the URL, you can make up to 35%. So you figure, like this one last one, I think we're doing one that's going to be about 140,000. We're getting paid, let's say it's 150,000, we're getting paid 30 grand on it. If you're making 35% of that. So some of these, even just for a referral, if you just want to toss a referral over to us and a name, and then we do the qualification, you get paid 5% on it. So a lot of these CPAs will find that very attractive. Oh. I know I would. I'm like, all right, I don't want to do the work. I don't want to do the qualification. I don't want to stand behind it, but here's a name of, 12 restaurants. And then, let's say 3 or 4 of them qualify, and that turns into, they're going to get 5% or whatever we're charging them. So we're doing a fee because it's a lot of work on our end from the CPA firm. And then we're doing it it's a CPA led, consult and review process, because I have to stand behind this, because in a couple years, I'm getting that stuff like right now with the ERTC credit stuff, where the IRS now is sending out notices saying, hey, we gave you this money, 2.5 years ago for the, employee retention tax credit, which a lot of them were substantial. Now we want to see the proof, the support, and we have those. So that's what I'm building now. So if somebody comes to me, I build an audit-proof package that we keep, we file the forms, and then we make sure that, we can defend it later on. Because I have to protect my license.
It's important.
And I understand how this stuff goes because the IRS catches up with this stuff, 2 years. You can go with some of these other companies, but then, in 2 or 3 years, they could, the lights could be out, everybody could be out of the office, and the company could be defunct. And then, who are you going to go back after? You know what I mean? So that's what we're doing. So I want to, I'm going to basically screen everybody, and I basically, CEO network guys or OSS guys coming in, they're going to take the spots first. But anybody else, and it's everyone is welcome, obviously, to this opportunity.
All right. So we found a magic number. Mo, can you
Annual income is roughly between 117 to 150K generally in positions of household of upper middle class.
So that's for 2 people, right? So
Yeah,
you
and it
said
puts them
75, yeah.
It puts them in the upper middle class.
22 to 24% federal
20
tax brackets?
Correct.
Is that for married filing jointly?
This
Like for a household, or is that for a single person?
It says, look.
Household, annual.
Household.
Yeah, so it's a whole, so you figure if you take the 150, 75. So that was like the threshold, I remember.
Yeah, because this was a couple years ago when I ID'd it to be 85, and obviously that makes sense with the way, dude, $100,000 today is way less than $100,000 in 2019.
Oh yeah,
pre-COVID.
Yeah,
way different. So that makes sense. So yeah, pretty much, guys. So it seems here that so the no man's land is 10. What is it? So it's 105 to 201. Is that the no man's land, pretty much?
Yeah, right here.
Because you're getting taxed at
24%.
At 24%
for married couples. Yeah.
So for a single guy, and then for married, it's
50 to
Okay. So yeah, guys. So try to make more than that if you're going to go ahead and get into that range, so you don't get destroyed as much on the taxes.
I will say that kudos to Trump, because I think on average across the board, everybody's paying about 2 to 3% lower in their base
than usual.
Yeah,
that's good. That's good. Was there any? Did you want next
topic?
topic?
Phone lines?
Yeah, let's open it up for questions.
You want to open it up for questions? Okay, that was quick. All right, shit.
But before that, we'll do our word from our sponsor for this episode of Money Mondays. All right, here we go.
You got this first. Go fast.
All right. Our today's sponsor is Marsman. Now, real quick, we got to talk about something that doesn't get talked about enough. Hit your 30s and stuff just starts feeling different. Not just in the gym either, like overall energy, focus, recovery, all of it. And then you start noticing little things, like why am I crashing in the middle of the day? Why do I feel tired? Why does the same routine not hit the same anymore? So start looking into it more, just trying to understand what's going on. And one thing that kept coming up was low T. Then once you go down that rabbit hole, you see people pushing TRT like it's just some casual decision. And look, for some guys, that may be their route. But for us, we want to start with something natural first because we're jumping into something more intense. That's why we're excited to tell you guys about Marsmen. When it comes to Marsmen, what we like about it is its approach. It's designed to support your body's testosterone production and help support things like energy, stamina, recovery, and focus, without going into needles / synthetics route, which is kind of tough. And it's got ingredients, guys, looking already like for Tongit, Ali, Shilajit, Stink, Boron, and more. We know many would be generally into what it's about. This is exactly what kind of product you want to look at, especially in regards to natural support, no needles, no synthetic route, and no over-the-hype top hype. It's all made in the U.S., third-party tested, and it comes with a 90-day money-back guarantee. So it's easy to try it without feeling locked in. So if you've been feeling that same slump, low energy, low drive, not feeling as locked in as you used to be, this is definitely worth checking out. For a limited time, our listeners get 50% off for life, plus free shipping and 3 gifts at mangotomars.com. That's why mangotomars.com, 50% off and 3 free gifts when you check out. After you purchase, they'll ask you where you're from, where you heard about it. Please support our show and tell them you came from us. We want to put this on your radar now because the real deal is wild. When you try it, it hits us and let us know what you think. Thank you from Mars Men for sponsoring this episode. All right, good stuff. I'm not gonna lie, bro. I feel like most guys feel like really low energy nowadays. They don't know why. It's probably gonna be tests.
Environmental assault on everything. The soap,
the water,
the food,
the soap,
the air.
you don't feel like that libido to want to like even smash it anymore. It's like stay home and play video games and not do anything. It is bad though. It's really bad, really bad. All right, so we'll do the phone lines, guys. Coming up very soon. We got a phone lines, Mo. But yo, so question.
Yeah, so go ahead.
If I have a property, right, and let's say like I'm fixing the roof, I'm fixing like the door and different things on the property, can I deduct all of that from my taxes now, 100%?
Yeah, so now with the bonus depreciation, typically you would have to add some of that stuff. So like a roof, typically you're going to have to, depreciate it over. It's more of a structural component.
Yeah.
So that stays on the 27.5 years. But anything like 5 year, 7 years. So let's say you put new cabinets in, or you do new carpet, or new floating floor, or stuff like that, or new light fixtures. You can deduct that under either Section 179, which we have, or you can do the bonus depreciation. I like the bonus depreciation
Better?
Yeah, just only because there's and I'm not going to get into the weeds with this, but there's something called depreciation recapture. So if you go to sell that house, anything that you depreciated under Section 179 is subject to what's called depreciation recapture. So when you calculate your gain on that, whatever portion of the gain is attributed to that depreciation is taxed at a higher rate. So if it's bonus depreciation, that doesn't apply.
Okay.
So I like to take bonus. That's getting a little technical, a little boring, but from
If it works, it works.
your CPA, hopefully they know what they're talking about. A lot of CPAs don't really break up the properties properly, but try to identify a guy that feels confident. Like if you have a house, let's say the general rule of thumb to be conservative is a $500,000 investment property. You don't really need a cost segregation firm, to pay them $5,000-$10,000 or whatever. If you got a
It's
pretty
overkill.
decent CPA, he could, the IRS allows you to estimate cost on certain things, the cabinets and the flooring and the light fixtures. You can estimate the appliances. It's not hard to do. You don't need an engineer for him to come and pay it. You could, if he's a good CPA, he probably will be. Even if he charges you a couple $100 extra,
It's worth
to
it.
do the return. Just do it that way. Yeah.
Okay. Cheaper. All right, we got the phone lines up, guys.
Yeah.
Okay, guys, the number is going to be here, 646-490-0394. Again, 646-490-0394.
And also, if you want to cut the phone line, make sure you donate with your last 4 digits in the donation, whether it's through FNF Super Chat, Locals Tips, Rumble Rants. So make sure, and when you donate, make sure you put the last 4 digits in the donation.
And guys, this is an announcement here for you guys as well. We have limited amount of time left. It's almost 2030. I'm telling you guys, time's running out. Money is not circulating like it used to anymore.
No.
Money is slowing down, and the rich are getting richer, poor getting poorer. Middle class is done. You see nowadays. Middle class is like almost like complete now.
It's eroded. Yeah.
So you gotta make your money now, man, before 2030, because guys, this is a real thing happening. I was in some rooms last year in the summer. I heard about this shit last year. It's happening before our eyes right now. And guys, Money Mondays are the best episodes because you got to learn how to make money, how to save money. Because fellas, right now we're in a recession.
Yeah, I like when you guys have these shows. You get back to your roots.
Yeah. These are the best shows.
I mean, this.
But you know the worst part? The media is telling people it's fine, don't worry, everything's okay.
Well, yeah, they
But
want
we're
you
in
to
a
put your
recession,
head.
bro.
Put your head in the sand and not.
It's bad.
Yeah.
And look at all the job losses. They're not reporting that on the news every day.
With AI right now. Yeah.
So by 2030 is gonna be cooked, bro. And like, what do you have after that? I got kids that are down here in Brickell. Dude, they're making like 50, 100K a month off of doing AI prompts. And I'm like, damn, they're 20 years old.
If you learn
Balling.
AI and you use it and you leverage it, like we use it in my business too. So
Yeah.
that's those guys will win for the short term. The next over the 5, 6, 7 years.
Yeah.
But those that don't know anything about it right now, I mean, they're cooked.
Yeah.
They're cooked.
I would urge people to find something they can do now to make some money before this whole thing collapses, because it's not looking good, bro, at all.
No.
Yeah.
No, not at all.
All right, we got a first caller.
Yes.
All right, let's go.
9651, you are up. 9651, you are up.
All right, we got-
left. He just left.
Okay.
Well, 2633, you are up. 2633.
Or just holding classes because.
All right, we can hear you, brother.
Hello?
Just turn your TV or computer off. Sound.
Hello?
Yeah, we got you, bro. What's your question?
Yeah, my question is, so I'm 19 years old. I bought my first house with my brother, and I've been living here by myself. I have been renovating and fixing it up, and I'm planning on selling it in a year. I just don't know where to go from there or what to do next.
Yeah, so I mean, obviously, that's not an investment property. That's your primary resident with your brother. So you have to live in it. So you can get what's called the an exclusion up to $500,000 on a gain. You know, so if your gain is less than $500,000, you can exclude the entire gain. But it's a one-time exclusion, so you get $500,000 through your lifetime to use. So that's for a primary residence. So, but the thing is, you have to live in it 24 months. So don't sell it before you're in it for 24 months. Otherwise, you won't qualify for it.
Oh, wow.
So just living it in a year won't qualify.
Right. Okay, so 2 years.
You want it 24 months, yeah. 24 months, they say 24 months within, the 5-year period, a 60-month period. You got to have 24 months of primary residence in that. It doesn't sound like you guys are going to move out and move back in. So just 24 months from the time that you guys closed on the property. And then you give all your stuff to your CPA. You give them the HUD statement from when you bought it, the HUD statement from when you sold it, and whatever amounts that you put in there. You want to, just even you got to write them down on a piece of paper. You probably want that better. But hey, we put cabinets in, we put carpeting in, we put new kitchen, refrigerator, whatever. Add all that stuff up because you don't want to take as much out of an exclusion as you want to because it's a lifetime. So you get $250 and your brother gets $250. And you don't want to use it all up. You know what I mean? So try to put as much cost that you put into that property in there. So the cost basis is way up as high as possible. Legitimately, that is.
Does that answer your question, bro?
Yeah, that makes sense.
All right. Anything else?
That is it. Thank you.
You're welcome.
But good stuff, though. 19 years old, bought a house with your brother. Good stuff, man.
Nice. Solid.
Yeah, I love the channel. Thank you guys so much.
No problem.
You're welcome.
All right, bro.
Appreciate
Who's up
it.
next? Guys, get on the line, man. This is a chance to ask Steve questions, man. You don't, completely for free. So this is obviously, as you guys know, we typically go with super chats first, but jump on the line. 646-490-0394 is the number to call into the show. Who's up next?
Next, we have 6854. You are up. 6854. You are up.
Hello.
Yeah, we got you.
Yeah, go ahead.
Hey, Steve. How you doing?
Hey, good. How are you?
Good. So I have a question. So last year, January 2025, IRS sent me a CP05A. I don't know if you know what that is.
So, yeah. So, wait. What's the number? Say CP what?
CP05A.
05A. Okay. Was it like okay. So, what is it? What did it say?
I don't know. I would know.
CP stands for computer. That's a computer generated notice. So it was like an automated generated notice. But do you remember what it said? I'm trying to think what that is. That's cool. Some of them I don't remember.
They just needed some stuff. So I think I didn't act on it in time. If I did act on it in time, they would have sent me some tax returns and I would have got money from it. But
oh yeah,
I didn't.
So it says that they're holding your IRS refund to verify withholding. So maybe they wanted a copy to typically back in the old days we used to attach a copy of the W-2. We don't do that anymore. I don't know why they would do that, but anyway, they wanted you to submit a copy of your W-2. I wonder if it's that shit. The IRS probably does this. They probably have some actuary guy that goes in there. If we send out all these notices and probably, maybe like 67% of the people will actually comply with it. They don't need to. They already have your W-2 and your transcript, which I'll talk about too. So and everybody should do this for the audience here. You should always pull your transcripts, and it's easy to do and it's free. And we could do it now easier than ever because the IRS has a website now set up for it. But anyway, getting back to your question here, I just wonder if they just it's kind of like warranty stuff. It's like how many people are, and they hold this money and then they make money off of it. And then they're like, well, you timed out. You didn't comply because the average person either got lost in the mail or didn't do it in time. There's no reason why the IRS should be asking you for a W-2 because they have that fucking W-2, excuse my language, in your transcript because your employer files it. They have to by law. So I don't know why they would be asking for it. So I think it's a scam. personally. I mean, I know it's a legitimate IRS notice, but there's no reason they would. You know, it's just stupid. But anyway, so since we're talking about the transcript stuff, everybody should get on irs.gov. irs.gov. Go in there and then hit the button. Get your transcripts online. And pull all your, because every time you got a W-2 or a 1099 or a brokerage statement, K-1, anything related that anybody files under your Social Security or your tax ID number gets put into a transcript at the IRS, and it's all there. So then you know exactly. Now, they don't get updated until about May or June for like 2025, because W-2s just come out in January, 1099s in February. So the IRS doesn't catch up to it till about May or June, but you should still have access. You know, you're going to have to, have a verification of ID. It's like, I think it's ID.me or whatever. You do that, you can get in there and instantly get all your IRS transcripts to find out what's in there. And always have access to that with your username and password. But yeah, I don't know what to tell you. I don't know why they would send that, because I mean, every employer has to file W-2s on all their employees. So the IRS has a copy of that. So I don't know why they would not be, unless the employer dropped the ball. That doesn't make sense to me. I think it's a way for them to generate, revenue, and they're like, they know a certain percentage of the people, like a warranty, are not going to take advantage of it or not do it in time and comply, and then they could, they'll hold your refund. So it's a way for them to keep more money, I guess.
So what should my next steps be then?
What year is it related to?
I think it's 23.
Well, then you have time, because you can claim a refund going back 3 years. If it's past 3 years, then you can't. You lose the opportunity. So you got to jump on it now, because we're in 25. So 23, you got to do it now. You got to do it like right away.
Was,
so
I spoke to last year I spoke to them. I had my accountant on the phone line. I'm like,
yeah.
I was talking to them, made them talk to each other. I'm like, told my accountant just give them what they need, and they sent it over. Because the thing was, they were supposed to send me money for this, right? If I sent the paperwork for this stuff, but since I didn't do it on time, they started sending me letters saying, "Oh, I owe money now." Like, what the fuck? Like, that didn't make sense. So then they stopped sending the letters once I guess my accountant sent everything over, but they didn't send me any money back. They should have, but they didn't tell me anything. But so my accountant did tax returns, I think, for 24, and I was supposed to get returns from the IRS, but the IRS cut money from that, from whatever they were asking me for the CPA.
Oh, so now you got, okay. Yeah, it sounds to me like you have to, I don't know, without looking at that notice, do you have a copy of it?
I actually don't. I think it was I lost it, so I didn't know what was going on the whole time.
Lost it, man.
Letters.
You didn't. So your accountant should have a copy of it, right? Obviously, he had to reply to it.
I don't know. I mean,
I would call him up. I mean, he did your tax
thing.
return. They got to keep copies of it. So I can't imagine he wouldn't keep copies of it. So I would start there first, try to get copies of it, and then if you want, you can get it. Send me. You could try to DM me or whatever.
Right now. They told me 16 weeks. Oh, 16 weeks from like the summer. It's been well past that, so I haven't gotten any answer for that. So.
Yeah, but it's a 2023 return. The lights are not out on that return. You could still amend, or you could still you're still entitled to that refund as long as you comply. It's
Okay,
when you
so
get past it's when you get past the 3-year limit when you lose the opportunity. So the opportunity still exists. So I don't care what they're telling you or whatever. The IRS, I know right now for a fact, is super slow at processing anything. I have stuff that's been taken like a year, for people to get their money back. So it could be still in process, but you need to get a copy of that IRS notice and a copy of your return, and then then you can address whatever they're asking for in there. But you still have time.
Good.
I don't believe you lost your opportunity on that. So
thanks so much.
you're welcome.
Thank you,
You're welcome. Yeah.
All right, man.
All right. Who's up next? Hey, guys, remember, call into the show. 646-490-0394. Phone lines are open, man. So this is a great opportunity to call into the show and ask, a very successful accountant who runs his own firm, questions. And you also, you normally work with, higher net worth individuals who are entrepreneurs, but you also help work with guys that are like regular W-2 workers.
Yeah.
or like let's say you guys want to, because I remember I had Steve. I was still working for the government, guys. So I remember Steve like vividly. He did my government taxes, and then he did my separate income that I made from the business. And I was able to segue from W-2 employee to entrepreneur working with him.
Yeah.
We were able to make that transition seamlessly. So he's still a fantastic accountant, even if you're not an entrepreneur or you're thinking about
But you had
entrepreneurship.
the business going too. You had to unplug fit, which you were doing predominantly. This wasn't your main gig. It was you were doing really well too.
Yeah,
with
it was a side gig.
with the fitness stuff.
Exactly.
Yeah.
And that's like when I had you on, I was still working for the government. And I remember you like for at least 1 year or two, you did my taxes. I went to H&R Block. I was like, this is bullshit. I didn't get like anything back. And then I remember you did it before we were able to get some money back.
Yeah.
And it was right when I was doing, because at that point the fitness business made a little bit more than the government.
Yeah, I remember you sending me. You were renting the apartment we're talking about how to incorporate it with your business.
Yes.
And then you showed me the area of the panorama.
Yeah.
I was like, dude, that looks good.
Yeah, and that was all like, because as a government employee, like you're not able to do that typically. So like it was a whole other thing. But I Steve was with me the whole way when I transitioned from being a regular W-2 employee all the way into entrepreneurship. So guys, like I would argue like, if you want to get into entrepreneurship and do this, you have one of the friendliest presidential administrations to do it right now.
Having a business for taxes is OP. It's like a cheat code.
Yeah.
You can write off a lot of stuff.
Yeah, you really can.
As an employee, you're kind of cooked.
So it's a good way. It's a really good way to cut your liability down of taxable, which your taxable income.
Yep.
Okay, but yeah, guys, call into the show right there. 646-490-0394. Let's go to the next caller.
Vat said, bring the hose out, bro. It's Money Mondays, bro. Get your money on point, man. The hose will be there, bro.
Guys, it's kind of cold in Miami.
Nowhere.
I think what happened? There was Chris was like,
it's super cold right now.
Too cold for the thoughts, right?
Yeah, but Wednesday, Friday, we got another show. We got shows.
Yeah.
We're good.
So yeah, Wednesday, Friday, we got some after hours for y'all.
Next
You guys
call-
got to get your minds out on these, bro. Y'all niggas just think about pussy all day, man. Come on, man. These niggas, all they think about is bitches, man.
I've been there.
All right. So who's up next?
Next up, 4371. You're up 4371.
Yo. Caller, are you there?
4371.
Hello.
Cool.
Yep.
Caller, how old are you? Where are you calling from?
I'm sorry.
How old are you and where are you calling from?
I'm 25 and I'm from Florida.
Cool. All right. What's up, man? What's your question?
What's up, Myron? What's up, Fresh?
What's up, man?
What's up, Steve?
Hey, how you doing?
I'm working in industry right now, accounting, 2 years. I'm doing my CPA right now. I'm about 2 out of 4 exams done. And right now I'm just looking kind of for the future, right? And just wanted to see if what, AI, streaming, streamlining businesses about bookkeeping and tax. I kind of wanted to start my own bookkeeping and tax business, or a CFO, fractional advisory. And I was kind of wondering what your thoughts was for the future. I feel like that might just be taken over.
No.
As far as
No. You're still gonna. ChatGPT still makes a shit ton of mistakes. Learn as much. I'm sure you do, right? You are you training yourself in all the different platforms of AI, the Claude and Grok and ChatGPT and some of the other agents like Manus and are you using those tools?
Oh yeah.
Okay.
At work, and actually
Yeah.
I work a lot with Power BI and a lot of data visualization tools as well.
Okay.
So
I mean, I would say if you want to get into it, there's still going to be a market for it. So it's going to be those that excel at it are going to be the ones that are really skilled at using those tools. So not only, I know you're going to have to, take a lot of time and, study for the CPA exam. That's it. But if you want to build a business, because you could do a lot with it, but you're still at the end of the day, the average person, the average client is not going to know how to use those tools for themselves, and they're not going to go down the rabbit hole trying to figure out all their accounting and their tax stuff. They're still going to need somebody like you to put all that stuff together. And, so with having the license and, having the knowledge and the background, I mean, I think definitely go for it. So if you're asking me don't bother because, we're going to be rendered obsolete. No, it's not going to be that quick. And still at the end of the day, there's still going to have to be some human interaction with the clients. And someone's going to have to review the stuff because you can't just basically trust AI to do everything automatically. I don't think we're at that point yet. So I think you're sitting in a good spot. When do you think you have your test done?
My projection, I want to be done by probably like June or July. I'm
Get it
working
out
on
of
the
the way.
third one right now.
Are you working for a firm right now?
I'm working in industry at a Fortune
Industry.
500, and
Okay. Okay. Good. Yeah. So I would say, yeah, definitely go for it. I think there's still an amazing opportunity there for you. So go for it. Just really master all those tools, that you can help you do a lot more, a lot quicker, and then start to bring on clients.
okay, I appreciate you.
You're welcome.
Thanks, Myron. Thanks, Fresh. Yeah, I started watching you guys about like 6 months ago, and I've been a lot smarter with my money. I'll tell you that. So
Good stuff, bro. Good stuff.
All right. Who's up next?
Next up, we have 1845. You are up.
Hey guys, do me a favor. Smash the like button, guys. As you guys know, these episodes don't generate as much views because people don't care about, being fiscally responsible. Everyone just cares about their degenerate behaviors like gambling. So we still do the show because, it adds a lot of value and helps you guys out. Like I literally dropped everything I was doing to come do this. So do me a solid, guys. The only thing I ask in return, you don't got to donate $1. All you got to do is just smash the fucking like button so someone else can come across this information. A lot of you guys are asking really good questions and, that other people might have or be in a similar journey, in their life. So the only thing we ask is smash the like button, man, because that's how important this stuff is for you guys, because this is the life-changing stuff here. It's not us, debate. It's about helping you guys make as much money as you guys can and be successful and be independent, right? So that you don't have to subject yourself to you can go ahead and get yourself a girl, put yourself in a position to find a woman that's going to be worthy of committing to.
Just add to your point.
But you have to get your money on point first, man. Like I've told you guys before, you can't be a brokey and expect a woman to submit to you. That's not fair on her end either. Like you got to do your job as a man. And a part of that is provisioning alongside the protection. 50-50 is not going to cut it.
Along with financial changes, economic changes, dating has changed too. And there's no more transactional than ever before. So think about it this way. If your money's not on point, what do you really have? What can you stand on?
Right.
Looks only?
Right.
Bro, it's not going to do very well.
No.
Long term, you need money for everything.
Well, and I think, like the general rule is like, women, like kind of filter and select for the top, 10, 20 maybe, if they're lucky. So I think this audience is representative of that, So if you got the after hour show where you got, maybe, this is like 10%, like the top 10, 15, 20% of the, this is the intellectual guys wanting to level up. Yeah. So this is what these are what these guys are here. This is what they intended out. This was their main mission. And that's what I saw from the beginning, with everything that's gone on in mine. I have a personal stake in this just because of my, my personal story and stuff like that with my son that was a follower of you guys too as well. So for me, this is the audience that we're here for. So this is with a main driving force, I think, that, going back to the grassroots of what you guys really set out to do.
Absolutely. Yeah.
And I think that gets missed.
And it's not for money, because if it was for money, we wouldn't be here right now.
Yeah.
It's actually, I'll be honest, it's actually fiscally irresponsible for me to even be here and do this at this point. But, compared to what I was just streaming before, but it's that important to us that we need you guys to understand this stuff. So I will take a hit financially so that you guys don't have to. That's fine. So the only thing we ask in exchange is that you smash the like button, share this with a friend, call into the show, ask questions. No question is stupid, guys. I guarantee you there's someone else on the line or someone watching that has the same exact question that you have. So, let's go to the next caller.
All right, who's next?
Next up, 1845. You're up. 1845.
What's up, man? How old are you? Where are you calling from? Hello, caller?
Yo,
where are you calling from and how old are you?
I'm from Toronto.
Okay.
37.
Cool. All right. What's your question, man?
Just asking, and shout out, Myron, just like the only real one left. Everybody else switched up, so whatever. But what's your thoughts on crypto right now? Because I
just bought 5 Ethereum while we were on stream, bro. I literally just bought 5 Ethereum while we were on stream, yeah.
Nice.
Yeah, bro. I always say when there's blood in the streets, it's time to eat. You got to take opportunities like this, and in times of turmoil and craziness and uncertainty, which is kind of what's happening right now with the imminent war that's probably more than likely going to go down in the Middle East. You got to seize these opportunities. I haven't seen Ethereum that low since like 2021. So I'm just taking an opportunity to get some now. But
crypto's not going away. It's going to be here. It's going to be up and down. And right now, there's like what he's doing right now. He's dollar cost averaging. He's buying the dip. So you want to pick up more when there's a dip. So you want to buy cheap and you want to sell low. But it's a long-term play. I think right now, me personally, I was really deep into the crypto stuff with and
you're one of the few accountants in Florida that have kept up with it. And that's another reason too, like for anyone that says like cryptocurrency isn't legit, guys, there's ETFs that track crypto now. Accountants are learning this stuff. Like it is here to stay, bro. It is here to stay. Obviously you're going to always have weird altcoins and all that other stuff, but I would say the staples that are not going to go anywhere for sure are going to be Bitcoin and Ethereum. Yeah. Right? They're just too big to fail now.
Those are the blue chips, and you could maybe throw Solana in there too as well. Sure. But those are the layer ones. Those are the layer ones, stick to those. I think for now, a lot of these guys, they like to play, with the meme coins and they like to play with a lot of other, derivative projects on these chains and stuff like that.
Because the laws are like rapidly evolving for crypto, right? When it comes to the accounting perspective, monitoring it, et cetera, from the U.S. government. So the fact that the U.S. government, I know some of you guys are like, oh my God, I hate the fact that the U.S. government is like, monitoring this thing. That's actually a good sign because that actually means it's legitimate and it's not going to go anywhere.
Yeah.
So yes, I get it. We want to be autonomous with our money, sure. But the government wanting to regulate it or regulating it to some degree does give it legitimacy.
Yeah, it's not going anywhere anytime soon.
It's a catch-22.
It's here to stay.
Yeah, but it's here to stay.
Just a follow-up question on that too. So, do you believe it's in a 4-year cycle, meaning we're about to be in a bear market and then we got to wait like another year or two, or do you think we might recover like soon, or what do you think?
I mean, yeah, typically that's 10 how the crypto. I don't think there's enough body of, historical data there to, some people, they like to read the charts. And to me, it's just like, if you're going to get into crypto right now, if you stick to the layer ones, like you talked about with the two major blue chips, and then you could throw Solana in there too as well. If you're just, stacking your coins and not looking to do any swing trading or stuff like that, then you don't have to really worry about the 4-year cycle. You're just going to use it for a long-term investment opportunity. So that's how I look at crypto right now, just because it's too volatile. And everybody's got a formula. Everybody's got a, everybody's going to tell you, it's like I don't know. It's like a horoscope for men. I mean, everybody's got the answer. Everybody knows. Nobody really knows. Nobody fucking knows. Just
all right, cool guys.
You just know over the long term. In 10 years,
Myron can come down to Toronto for one of those college debates, that would be crazy because we're very liberal over here, and
probably can't, bro. You guys don't have free speech. Probably not.
Yeah, all right.
You guys are too cut, bro. I'm sorry.
Cool.
UK and Canada, bro. I'll get arrested for the shit I say over there.
Yeah, I'm trying to get out of here, man. I'm trying to get out of here. It sucks, but whatever, man.
Canada's cool,
all right, but thank you. All right, take care, bro.
Later.
Bye.
Canada's very brown now. Very brown.
Yep. Super brown.
Yeah.
All right, who's up next?
Next up, we have 3077. You are up 3077.
What's up,
bro? Hey, guys. Can you hear me?
Yep, we got you. Yep. What's up?
Perfect. Massachusetts, 37 years old. Just a couple questions, if you don't mind, real quick. 100% bonus depreciation. Wasn't that primarily restored back in January 19th? Anything before that is 40%?
Good question.
Wait, so
that's
he's asking about
Steve question.
Bonus depreciation?
Yeah, so he asked about, go ahead, ask it one more time, bro.
Yeah,
you sound a little
100%
muffled.
Bonus depreciation was permanently restored back in January 19th, so anything before that is only 40%.
Yeah, because it was sunsetting, so they made it permanent. Correct. That's correct, yeah. So moving forward.
So what if you bought your house January 18th?
Oh, so that's what happened with you?
No, but I'm just saying I bought mine the 21st, so I don't think I'm in luck. But just in case anybody out there that's listening, they bought it before then.
Yeah, so that's gonna be the cutoff date there.
Oh, so they're cooked.
So they're cooked.
I mean, hypothetically, yeah.
I see. All right, and then second question: are you taking new clients from out of state, like Massachusetts?
Yeah, we do all the time. Yeah, so I have. If you go into, just DM me, and then I could give you a link to get it to extra to my
Steve is
CPA
from the
firm.
Northeast originally, guys.
Yeah.
He's from New York originally, so he's very familiar with
Yeah,
the
I got my
tri-state area.
I have my
New
license
England.
in New York State as well too, but I have clients in California. It doesn't matter, because I'm federally licensed with the tax stuff, so I can do all 50 states.
Okay, all 50 states.
Yeah.
Where do we DM you?
So DM me on my Instagram, and then I'll give you the link to get into our new client prospect intake that we have. I'll send you that link. I should probably put it in my bio
Can you put
too.
the Instagram on the actual screen?
Yeah, it's at seeing
Or
beyond the
maybe
numbers.
the link to your website too would be helpful if you could.
Yeah, that's the link. I'll give you the URL there when you DM me.
And then where can we find your book?
So that's going to be in the bio of my Instagram. So I have there's free tools in there, and then there's products and services in there too, and there's a bunch of them in there too as well.
All right, perfect.
So everything's
Thanks, guys.
right
Keep
in
up the
there in
good
my
work.
bio.
Appreciate it.
Appreciate it. Thank you.
Who's up next?
Next up, we have 2615. You are up. 2615. You are up.
Yo, hello.
Yep. Where are you calling from, and how old are you?
Yeah, I'm calling from Arizona. I'm 27.
All right. Hit us with your question. And guys, smash that like button. We got about 2,300 you guys watching live right now. We're on all the platforms. So smash the like button for us, guys.
Mondays.
If you're watching on Rumble, open up a YouTube tab and smash the like button. But go ahead, bro. What's your question?
Yeah, so I have a question. I've been doing, I bought a house. I've been doing room rental model, and some of the tenants have been paying me in cash. Not all the time, but every other month here and there, they'll pay me in cash. But for the most part, they'll cash at me or Zelle me money. It's my first full year, 2025 was the first full year I did that. So how would I go about, the cash payments and stuff like that? Is it even worth it? Because it was around $30,000 of cash payments that I got total for the year.
Yeah, so I don't know how when they Zelled you. I know some of those, you get 1099Ks in there, said, depending on how much it was. But I don't know if they put any type of different description in there. Did they?
No, not all the time.
Okay, so if it's rental income, yeah. So are you reporting your rental income and taking expenses and depreciation on those properties, or what's the situation on that? How are you handling that?
It's just one property. I live in the property myself as well. It was more of a play to bring down my total mortgage cost.
Oh, so it's like your primary residence that you're kind of renting out some rooms to, like this, sort of.
That's right.
At the end of the day, it's, it's a very low chance that the IRS is gonna, pick up on that, but on the offshoot that they would, then it's not a ton of money. The IRS has a ton of resources to come after and pick up, or but if you don't even have an opened up Schedule E rental schedule for that, it kind of just sounds like it's just personal, like money going back and forth, and people are so typically it's kind of off the radar, So, I would talk to who does your taxes. You do them yourself, or you got somebody doing it?
I was doing that myself for a couple of years, but I trade stocks too, and I also sold some stock last year. Took about 20,000 in profits, and then that's kind of what I'm worried too. I really don't want to have a big tax bill, and then I make about 120 at my job, and then now with the about $30,000 extra in rent payments.
Yeah.
I'm a little bit scared about how that tax bill is going to come out. So that's kind of a worry of mine right now.
Yeah, the problem is, because you're renting a primary residence, you're renting rooms in there, so you can't really depreciate the property because it's your personal residence. So it's just going to be all rental income. So that's something that you're going to talk to.
Okay.
If you feel comfortable keeping it off, or I don't know, or to talk to your tax preparer. But I don't know so you're going to get like a 1099 consolidated statement from your brokerage account.
Yeah, I just have to print it out. But like I said, I've kind of been procrastinating on all that stuff just because of the tax bill, and
And you're
It's every year that I have to pay the IRS, man. The government fucking digging in our pockets, man. I'm tired of that shit.
Yeah. I mean, yeah. I mean, I don't know what to tell you about the rental income. So,
okay.
I know what I would do, but I ain't gonna.
We're online, bro. Yeah, you know what? Just to preface this is not financial advice.
This is not financial
That
advice.
is a little bit tricky there, my friend.
Yeah.
I don't know what you're trying to do there with cash, but hey, bro. You know what I'm saying? But
Nah.
I mean, $30,000 is substantial for renting a room. So I don't know what you're charging these guys, but it must be.
Yeah. No, I mean
decent
it's only $850 a room, and that's pretty comparable for the market here on a room rental basis, and it's 3
Like I
rooms.
said, bro's doing a webcam business.
something, bro. God damn.
Nah.
30K in cash? Yeah, we're thinking Zelle and cash.
Yeah,
This
they
nigga
could
doing
some
something,
crazy
bro.
shit probably. This nigga might have the feds in his crib, man.
FBI, open up!
Nah. I'm a civilian, man. I'm a civilian.
Oh, yeah, okay, buddy. All
None
right.
of that.
All right,
He's
man.
a civilian. Oh, well. All right, who's up next?
Hey, thank you guys. I appreciate it. Thanks,
All right.
Myron, everything you do. Fresh and Fit. Shout out Mo. Shout out Fresh Updates. Appreciate it, guys.
All right.
Take care.
Fresh up this.
He said fresh updates. Okay.
Yeah, guys, by the way, I'm going to be posting clips from the IRL stream tomorrow on Fresh Up This as well. Shout out to him. Should be pretty lit. Tomorrow, 5 p.m., we're going to go to the gym, Taco Tuesday, fun date, and, of course, some activities after for the IRL stream. Gonna be fun.
Nice.
Yep.
Next up, we have 8314. You are up. 8314. 8314. You are up.
Hello,
What's up, man? What's your name and where you're from?
Jaden from South Dakota,
All right. And how old are you?
24.
Cool. What's your question, bro?
So I work at UPS right now, and we got offered $150K for a buyout to leave. What do you guys have for an opinion on that?
Wait, about from your job?
Yep.
Wait, so they're gonna pay you that to leave the job?
Yeah.
So they're going to pay you $150,000, and what if you don't take it? Then what? You risk just getting laid off?
Yeah, pretty much.
Okay, that's a no-brainer. Take
Yo,
the
just
money.
take it, bro.
Take the
What
money and
the-
run.
Nigga, what? Bro,
Yeah, I mean, you really have
I
no
was
choice.
thinking the
They're-
same thing,
yeah,
man.
yeah, that's
I don't know.
bro, that's a fucking saving grace.
that's
yeah,
a
wait,
pretty
I'm
nice.
a little confused. Well, there's got to be a reason why he's asking this, because I don't think, like, is there like a chance that you would not get laid off? Is that why you're asking?
No, I'm already laid off right now.
Okay,
Oh,
so it's literally not even a certainty. It's already happened. So I'm confused why
Yep.
you would not, like, what has you questioning not taking it?
There's a lot of stipulations with it, like taxes and stuff like that. I'm not really quite sure exactly what I would do with
I mean,
it
there's- yeah,
after I took it.
I mean, of course it's going to be taxable
like
because it's
that.
income, but like what else like had you, because clearly there's a reason why you called in. So I'm trying to figure out, because this is kind of a no-brainer. So I'm trying to figure out what has you concerned.
Is it a severance package? Severance?
There's just things like in it with
it's a buyout.
like it says it says like it'll take a certain amount for taxes, and also you can't join like unions and stuff. So it's like
For how long?
I don't know. It's forever.
Oh.
Wait, you can't. Okay, explain that, bro. Because yeah, like I need you to like fully articulate what actually has you concerned here. So first, it's taxable. Fine, we know that. What
Yeah,
else
that's
has you
not really
concerned?
the problem, no.
We're gonna get taxed no matter what, bro. Like that's
Yeah, for real. Yeah.
So
It's-
besides taxes, what else
What my
has you worried?
concern is what I would do afterwards, I guess.
Get another job?
So just get it, sit on the money, put it in crypto or something like that.
Yeah, and get another job. Like by no means
Okay.
take that money and run and not get another job.
Yeah, you need to start work. You need to start
No,
working
no,
again.
no.
Give yourself a.
Yeah, I'm already setting myself up for that. No matter if I take it or not, I'm already looking at like multiple other jobs.
Are they
in the
paying out
process
like
right
your
now.
401k and your benefits too, like that? Are they liquidating those?
Oh, good question. Yeah.
This
This 150K,
says
how's
that
it
you're
broken
supposed
down?
to keep your benefits and retirement stuff, but that's only for 10 years up, I think.
Okay, that's not bad.
All right, so this 150K severance package that they're giving you, or buyout, whatever you want to call it, how much of it is actual
Yep.
cash?
$100K, I think, is what it will be after taxes.
Okay.
Around there.
You get it all in a lump sum, or does it get paid out to you weekly or bi-weekly?
Just one lump sum.
So you get one lump sum of 100,000 cash, and then where does the other 50K come from? Or what does the other 50K encompass? Excuse me.
What? Sorry.
Okay. You're getting 150 total in value, right? For the severance package. 100,000 of that is going to be cash. What is the other 50K comprised of?
That's what they're taking for taxes.
So
they'll just give you 100K straight, basically, and take the other 50 for taxes. Is basically what I've heard.
Okay, so
that's pretty steep,
so then what's your concern? Because you're already going to pay the taxes up front then.
I was basically already gonna take it, but it's a certain amount of people that can take it, so I'm not even sure if I'll be able to. I mean, it's a good chance that I'll be accepted for it, but I just didn't know exactly what to do afterwards with the actual cash.
Oh, okay. So how to invest the money, basically.
Right, yeah.
Well, because you first called in saying, should I take it? So that seems to be the primary concern. Now you're saying if you take it, what to get. Yeah, obviously invest and get another job. 100%.
Okay.
Yeah, I'm going to be honest with you. Tough love here, you suck at communicating. And the reason why I'm calling this out properly is because a lot of young men have this issue. Notice how we had to pull the fucking information out of you by asking a bunch of follow-up questions? That's because we care.
Yep.
Most other people are not going to care.
Yep.
You absolutely fucking
That's
suck at
why I watch
communicating.
you guys,
you need to fix that, bro. Like, and I'm telling you this as a man. This inability to communicate your ideas thoughtfully and ask questions coherently is going to fuck you up in the future. Big time.
Okay.
So, because that's a huge symbol of competency is the ability to ask good questions and or provide information when asked without people having to actually, ask a bunch of follow-up questions. And this will serve you throughout your life, bro. So like, you really suck at communicating. You got to fix that.
So I'll add one thing for you before you leave as far as what to do with the money, okay? So I would look into setting up a CD ladder, okay? So if you got $100,000 free cash, figure out how much you need for your immediate needs, okay? Whether that's going to be 30 days, 60 days, or whatever before you get a job. And then from there, take the remaining and then set up like CD ladders where they could be in increments of 10,000 or 5,000, whatever, so that you have those, because you're going to get a higher rate of interest, and then they come and they expire maybe every 60 days or 90 days. So you always have some liquidity. So you're not you're not strapping yourself from cash. You don't have to, ruin a CD or whatever. Because you don't know what to put in it. I'm not going to tell you to buy Ethereum or Bitcoin or any shit like that,
Right.
And then we don't have a job yet. So you want, try to get the
How
most
much money do you have
interest.
saved?
I have 15K right now.
Okay. What are your living expenses every month?
Around 2,500.
Okay. So let's do the math here. Let's say you have a year in reserves, right? You need 2,500 to live. 2,500 times 12 is
30,000.
30,000. So when you get that 100K, put 30K away and put it into an emergency fund for a year. Take the other 70K roughly. Find some type of asset class to put it into. You can even diversify it. Maybe a portion goes into
Crypto,
real
gold,
estate, a
silver.
portion goes into crypto, a portion goes into index funds or whatever. But also make sure you have another job as well. Like have another job when this is all there. And then also learn how to communicate better. Because that's a serious. I don't think the value of communication is pushed enough on young guys, and it's actually something that I've noticed that I've wanted to speak up about. I've went to many different events, America Fest, etc., and a lot of young guys come up to me, and I've noticed that a lot of you guys have a serious problem being able to properly convey yourselves and are awkward. And that will fuck you up in the professional world later on.
I'm curious. Do they still have Toastmasters? Like when I was younger,
yeah, they still
I did
do.
Toastmasters.
Actually.
They still have
Fresh
that.
did it before too. It helped them a lot.
Dude,
It started used to be way worse.
I was terrible, bro.
I don't know. Like I would look into it because it will literally transform your communication.
Yeah, bro.
Like it's amazing.
What is it?
It's called
Toastmasters.
Toastmasters.
You can find it
Everybody
in your local community.
Yeah.
Because and I'm telling you this because out of love, bro. Like, and I'm not doing it to shit on you or anything else like that. But it was damn near like I was asking you questions like you're on a polygraph. I shouldn't have to ask all these follow-up questions to figure out what the fuck is going on. You should be able to articulate your story concisely, clearly, and then, be ready for the feedback and provide the people that you're speaking to the requisite information so they can give you a proper response. That's a skill set that, isn't taught enough anymore. So work on that as well. But you're in a good position financially, dude. Besides the fact that you suck at talking, take that 100K, They're already going to take their 50K from you anyway. Take 30K, put it in a rainy fund day. That'll set you up for a year. Take that other 70K, invest into different asset classes. You can buy some gold. You can buy some silver. You can buy 70K is enough to put into multiple different things. Get some Ethereum or a little bit of Bitcoin. Maybe depending on what state you live in, maybe even have enough to put a down payment on a single family home or a duplex or something like that if you live in a cheap area. So you've got some options, bro. And then invest some of that money also into maybe a speaking coach or Toastmaster or something, because that's an extremely underrated skill set that people need to learn. When you speak well and you're able to articulate themselves, people respect you more, creates more opportunities for you, and it creates an air of competency, which is extremely important, dude. So work on those things and you'll be fine. But you're in a good position, dude. You're in a really good position.
Awesome.
All right. Awesome, man. No worries. Who's up next?
Thank you. Appreciate you guys.
Tough luck, man, but we got to be honest with you.
That's good. That was good.
Right,
That was great.
Yeah, dude, it's a phenomenon that I've noticed only with young guys, bro.
Yeah,
it's absolutely nuts.
It's the times, they're on the computer, they're chatting, their
tablets don't stop.
Yeah.
Yep. Like I've noticed it with especially like Gen Zers and on. It's a very it's very noticeable.
Well, even the girls are like that too. It's not just the guys, even the girls.
Yeah, the girls are brain dead.
The girls are like
Here's the difference.
Yeah.
When the women are brain dead, they can still get by in life. Like for the guys,
they look good,
yeah,
bro,
they're
like
pretty.
it's gonna be tough.
Well, they get the grace card, yeah, but
Toastmasters helped me a lot, man. Because honestly,
you do Toastmasters? Because I did it a long time ago. I don't even know it was still around.
I couldn't say it was like I'm in a room. I'm like, damn, I'm so nervous.
And then you get critiqued with everybody there, which is good. That's
my
what you
first
need.
job interview, I killed that shit because of Toastmasters.
Yeah,
I went in there. You're hired on the spot. Boom. But again, my first fucking month here was terrible, bro.
Yeah.
I don't know. It was bad.
Yeah. And look, let me be honest, guys. There's a lot of people that are super smart, damn near genius level, but they suck at speaking, so everyone thinks they're stupid. Right? So that is, and then there's plenty of people that speak well but are stupid. But people think that they're intelligent.
Yeah.
So, you know what I mean? Like there's,
well, that's like AOC, right?
Yeah.
It's like
there's lots of
she's
people.
She's pretty. She looks good, but she doesn't know what the hell she's saying at the time.
They
you see that clip of her?
Yeah. They have a good grasp on the English language. They're using great vernacular. They're stringing their sentences together in a charismatic way, but they're still stupid.
Venezuela's below the equator.
And you know what? The thing that kills me, the person that's going to go further is the person that speaks well and is a bullshitter over the person that doesn't speak well that's higher IQ.
That's true.
So that's the importance of being able to communicate effectively, guys. It's that important, dude. It's that important. It's something that I've really noticed with a lot of young men, especially when I go to these conventions like America Fest. A lot of you young guys come up to me and talk to me, and I just notice like extremely awkward and weird mannerisms when people communicate to me, which is fine. Like I'm not mad at it. It's just something that I've like really noticed. I'm like, wow, like this is something we need to fix.
Yes, chat, I can do better, but socially, I'm very adept. So there you go.
So anyway, but yeah, no, the guy's in a good position, man. So bless him. Who's up next? And guys, don't laugh at him in the chat. Some of y'all have a problem with communicating too, bro. Some of y'all laughing in the chat. Some of y'all niggas can't even.
Or you're nervous.
Yeah.
You can't even call in.
You can't even call in, bro. So shout out to him for having the balls to call in. Who's up next?
Yeah, look at Elon Musk. There you go.
Oh yeah, Peter Thiel stutters a lot too, really bad. But
dude, that nigga balling.
Yeah. Well,
next up, we have.
I also don't think he's as smart as he claims, but that's a whole other conversation.
8422, you are up. 8422, you are up.
Hey.
Yo.
Martez, Alabama.
Okay, you're calling from Alabama. How old are you?
Yeah. 35.
Oh, 35. Okay. All right. What's your question?
Yeah. Yeah, I talked to Steve last time you guys had a call-in show. I asked him about, so I'm moving out of the country. I'm moving to Jamaica. So if I'm doing consultation, so I'm doing like freelancing. And if I'm doing consultations, onboarding people to crypto, also I'll be doing like travel content. How am I taxed if I'm receiving, I guess, U.S. dollars?
So the U.S. is one of the, 2 countries in the world that taxes you on your worldwide income. So, whatever you're going to contribute, and you get a tax credit for it. So I don't know.
If there's a certain amount you got to make, don't you got to make like 100K or more?
Yeah.
For them to tax you if you're abroad?
Yes, correct.
Are you going to hit that number, bro? Or no? Or more?
Say it again. Am I what now?
Are you going to make over $100,000 a year in Jamaica?
More than likely, yes.
Okay, never mind then. Yeah.
So, and then you're still going to keep your U.S. status, right? You're not giving up your passport.
So,
okay.
So my wife is Jamaican, so more than likely I will end up. Would it be smart for me to naturalized in Jamaica as well and have dual citizenship, or should I just keep it?
I mean, I don't know
how
about
it is?
that, but I mean, that's not gonna really affect your tax.
You would have to renounce your citizenship to not be liable for the taxes, which I don't know if you want to do that.
You'd have to give up your passport here, so that's a big.
Are you a dual citizen?
No, he's not yet.
No.
He was thinking about becoming a.
No,
his wife is Jamaican.
Yeah, she is.
Okay.
So anyway, so getting back to the tax, so whatever. I don't know what the tax law is in Jamaica. So how do they tax you there?
I'm not sure yet.
Okay,
So
so
that's
find
actually a
that
good
out.
question, yeah.
So find out like if they're going to tax you there. So let's say they tax you, like let's say you go to Puerto Rico and they tax you like 4% or something like that, right? You're going to get a tax, or another country, whatever you pay in taxes in that country because you're residing there and you're like a full-time resident there. If you pay anything to that jurisdiction, you get a tax credit here in the U.S. So if you file your taxes here, whatever you paid there, the U.S. will give you credit for it. It's called a foreign tax credit. So you're not you're not having to pay double the taxes. So yeah, U.S. is going to tax you on your worldwide income if you want to keep your U.S. citizenship status, unfortunately. And there's going to be certain thresholds that you can make tax-free abroad. But that's something you have to find out with the Jamaican government to find out, if you're going to file there, become a permanent resident there, but still keep your
Because the
U.S.
taxes might be high where you don't even want to live there anymore, bro. Might not be worth it.
Yeah, it sounds like I should. We've been checking on Puerto Rico as well, but the real estate is
Puerto Rico's good
really
for that.
higher.
Yeah, Puerto Rico's good. And
But it's not cheap though. It's not cheap at all.
as long as you're
Yeah, I know.
onboarding people that are outside of the island, that you're not onboarding people that are living within the island. So as long as you're providing services like it's called export, then you can make all that money and then that's tax free. Whatever the situation is there. So I don't know, is that the situation? It's gonna be
Bro, I would say figure that out before you go there, dude. Because you might the whole reason why you're moving there might be null and void once you figure out how much you get taxed in Jamaica. Because I'm assuming a big part of the reason why you're going there is probably for lower cost of living and to mitigate tax liability. Who knows, bro? If they have high taxes there, it might not be worth it, or a high cost of living. Like for example, when I went to Turks and Caicos, bro, everything was expensive as hell there.
Bro, Barbados, Jamaica, all that shit's expensive,
the Caribbean, bro. All the stuff there is expensive as hell, dude. So I don't know if you got to do the math to figure out if it makes sense.
Hey, everything's imported there, so you're not, and plus the services are not going to be the same as you're enjoying, in the States here.
It's gonna suck, bro. I'm sorry, bro. The Caribbean sucks. Like they're on Caribbean time. Everybody's late. Nothing gets done.
Very slow.
But my wife is Jamaican, so I mean I'm used to. I've been there like 6 or 7 times, so we already have a house there, so we're good as far as that.
Okay,
but it's
I'm
one there to
used to
spend.
it.
It's one thing to spend, 4 or 5 weeks, let's say at the most, but it's one thing to spend 4 or 5 months or a whole year or something like that. You know what I mean? You're going to be missing a lot of stuff. So, we're spoiled here. We have a lot of modern conveniences that when you go to the island, you get power outages. You got to wait in line for certain things. It's not the same. I mean, in Puerto Rico is part of America, and it's probably more Americanized than Jamaica, and they have a shit ton of issues there. So, I mean, I would be hard pressed to spend a long amount of time there.
I mean, I won't miss it. I'm trying to get out of here. I'm not gonna miss the U.S. So I don't.
Oh,
care.
that's good then. Yeah, so that's the attitude they have then. So
yeah.
I would say though, retiring in the Caribbean definitely is good because it's very relaxed, very chill, and slow pace. So retiring there definitely would be a better option than America, because you got to grind here. Caribbean, you just chill. It's like making money. You chill, go to the beach, sip some rum punch, and just relax. There's no really like hustle bustle. Is like
That's
super chill.
Right. Yeah.
So.
Yeah.
But it depends on the if you, I don't know, I would get bored of that. I gotta be
exactly. If you're a grinder, you can get like. I remember Kanye West went to Barbados for like I think 1 day.
Yeah.
He's like, bro, I can't live. I gotta leave it right now.
What'd you do? Then you pick up bad habits.
Yeah.
Start drinking. Then you start drinking more because you're bored.
Yeah.
It's like I gotta be active. I gotta be doing stuff.
Yeah. Good point.
That's just me personally. But
yeah.
Well, I'm a disciplined person, so I'm good. That's not gonna bother me. So I'm good. Yeah.
All right.
But okay, I appreciate it.
Stay away from that ganja.
Marijuana.
Boom, all right, man, have a good night.
Take care.
All right, man.
All right, bro. Yeah.
Yo, ban this nigga Joe Ross, bro. Ban that nigga Joe Ross right now, bro. ASAP.
Who's
permanent?
What happened?
Barbados don't claim fresh? Nigga, fuck you. Of course they do. Barbados is lit. It's family.
All right. Who's up next? We'll answer a few more guys that we're going to close out here.
Yep.
7205.
You've got places to be and people to see. Well,
and money to count, right? Money to count.
I gotta go see Brett.
Oh shit!
Oh
okay.
yeah, there you go.
You met Brett.
7205.
You haven't met him yet?
No, I've known for a while.
Hey, what's up, fellas?
Yo,
what's up, man?
Fresh Myron, and what's up, Steve?
Hey, how you doing?
Good, good. I just have a question. So, how would someone that's wanting to catch up on owed back taxes, how would they go about doing so? What's your advice?
So I would start with your first 3 years. I don't know what the situation. Are you talking about yourself personally?
Yeah.
Okay. So is there any reason why you didn't file? And did you get any notices from the IRS saying that you owe anything?
Yeah, so I got a couple notices, from them in the mail, and then I recently got like a promotion, maybe like a year two back, and I'm in that like 70 to 75K tax bracket, that range. So I owed a little bit at the end of the year, and I just didn't have enough to pay for it in full.
Okay. Do you know? So are there any years where you didn't get a notice?
What's that you said?
So did you get a notice for every single year for the past 3 years?
Yes, for the past, it's been 2 years. The last taxes I filed 2024.
Okay, so you got a notice for 20. Okay, you filed for 24.
Yeah.
So are you a W-2 employee?
Yes.
So there's not much you can do. So they already did a substitute return and they said, okay, you owe this.
Yes, exactly. Okay. And I called around also to see like exactly how much it was, and they kind of gave me an estimate. IRS.
So the issue is you want to file. Okay. What you can do is you can get the penalties removed for the first year because it's a first-time waiver. So I would try to do that. And then what you can do is work on a payment plan. So as long as it's less than 50 grand, you can get an automatic payment plan. You can do that yourself right online. As long as you could pay the total balance in 72 months, which is 6 years. As long as it gets paid in full, then you could set up an installment plan. But you want to file those just in case anything ever happens and you got to file for bankruptcy. The statute of limitations starts ticking the day you file your return. If the IRS is going by, you just pay the notice, then no return ever gets filed. A statute of limitations never gets started, doesn't start ticking. So I always tell my clients, just let's file it, whatever, and then we can get some of the penalties waived so it gets reduced to some of the balance. On one of the years, you get a mulligan. And then, if you don't have the money to pay it, whatever, and then you figure out a payment plan. So you can go on as long as it's less than 50 grand. You could do it automatically, put it in there, and then divide it by 72, and then figure out what your minimum payment needs to be. And it's kind of really not that bad. If you get some extra cash, throw a couple extra payments in there. But once you start that payment plan, you never want to skip a payment. So you want to probably put auto payment on there because a lot of people don't do the auto payment on there, and then they mess up. They skip a payment, or it's late, and the IRS immediately cancels that payment plan, and you got to start all over from square root. So you want to do when you go in there, and they'll waive the application fee for the payment plan if you put your bank account information in there. It's not that hard to do. It's very easy.
Okay. All righty. Cool. Thank you for the information, and I appreciate all that you fellas doing.
You're welcome.
For the community and helping fellas out and helping the guys. So thank you so
problem.
much,
bro.
Do me a favor, guys. Smash the like button on YouTube. If you're watching on Rumble, smash the like button over there. Let me look here where we're at as far as like we only got 550 likes, guys. Come on, man. Let's get to like 90% engagement. Let's get close to 1,000. Smash the like button, guys. Who's the next person?
Next up, we have 1258. You are up.
All right, 1258. Hit us with a quick one.
Hey, what's up?
Yeah, what's up? Where you calling from? How old are you?
Hey, listen, Myron. Hey, Big Mo, what's up? This is Richard.
Big up yourself.
Bomba. Big up. So, Myron, last time we talked about my coffee business, I had some change of plans. I had to move to Florida. I'm in Florida now, so ta-da. So, I just wanted to follow up with you. I got a job, and I'm trying to put in as much overtime now so I can start my, business.
Cool. All right.
I did watch another, just to deviate from that one thing. I know, getting ahead of myself. I watched your podcast with Neo Davis about hall rentals, and I figured that in where I'm at in Florida, there's no hall rentals around there. So what's your thoughts on that?
Oh, that might be a question for Neo Davis, bro.
That was a while back. Neo's here today.
Yeah.
Maybe we can bring him back. You still talk to him?
him?
Bring him back on in the future.
You see hall rentals, like renting a hall?
Yeah, like renting out like
hall?
event space for
Oh
like
yeah, that's not. Yeah, that's not our thing at all, bro. But we can definitely. Fresh could reach out to Neo and bring him back on the show. Because that's actually, now that I think about it, that was like one of the ways Neo made his money was controlling big like spaces to hold events.
Where is he now? Actually?
And yeah, we'll do that for you, bro. That's cool. Anything else?
Oh yeah, he's still here.
That's it. I just wanted to call you. Well, Myron, you talked about with Fresh too. You guys talked about the coffee stand idea. One of the I'm not trying to bring up the women. One of the women said she made like $250,000. So I'm still going with my idea about the coffee stand idea that we talked about.
Yeah, I mean, dude, if you want to do it, man. I mean, just like I said, you got to be.
Well, I'm putting in the overtime. Putting in the overtime so I could get that card. The card's really relatively low. It's just a food handler license, and I'm good to go down here. I could open up on the side of the roads, permitting.
Yeah, I mean, as long as you keep overhead low, man. I mean, do it. Go for it.
Sounds good. So this is an update. Nice talking to you guys. Big Mo, big up yourself. Big man thing.
Big
Guy
man things, Guy and these things.
Yeah, man.
All right, no worries, man. Yeah, and chat, no after hours tonight, guys.
Not tonight.
Lots of these guys.
Wednesday, Friday.
Dudes are going crazy in the Rumble chat.
I'll say this though, as much as girls aren't that impressive, they're good to look at. So I get it, chat.
Always.
I get it. Don't worry, tomorrow we'll see some girls tomorrow on IRL stream.
Yeah.
There you go.
I'm gonna go back on stream after this too, guys. So hey, you guys will get after hours, but I'm gonna probably cover some political stuff, react to some of the stuff with Clavicular and his Larry Will's wife. That shit was crazy.
Yeah, it was.
I'm gonna give you guys some coverage on the war, what's going on. Some new stuff came out. So don't worry, guys. We got y'all anyway, man. Who's up next here? Answer like one or two more of these things, and we got to get Steve out of here. It's already midnight.
2339, you are up. 2339, you are up.
All right, man. What's up? Hit us with the question.
Good evening, gentlemen. Good evening.
What's
Quick
up, man?
question. I got a couple properties, and I'm used to filing a Schedule E. So my question would be,
how old are you? Where do you live, by the way?
Decide to open a trust.
How old are you, and where do you live, by the way?
I'm 39, and I live in Rhode Island.
Cool. So you're inquiring about getting a trust to protect your assets, right?
Correct.
Fair enough. That's a good question. I got to do that too, actually.
So you got two properties.
Exactly.
What's the total value of them?
I actually have 5.
Oh, you have 5. Okay.
I want to reserve that, but it's definitely up there to the point where
Are they in Rhode Island?
I need to consider this. Correct. Yes.
Okay. So what is the total? What is the total value of all the assets?
I'm definitely over $1 million.
Do you have anything closer, like over $1 million is a lot, bro. Like, what do you mean? Like 1 million to what? Give us a range.
I would say just to be conservative, between 1 and 3.
Okay. You should know that, by the way. As a real estate investor, you should know what your assets are worth. And then how much debt do you have on them?
Right now, under $500,000.
That's pretty good. So you got a lot of equity.
So you got roughly 50% equity in all of them.
Yeah, I think so. What you want to do is you get yourself a good attorney that handles that stuff. That does a trust. That's outside that question. I appreciate it, but it's outside of the scope of my professional,
expertise.
Scope. And that's a question for a trust attorney. There's a lot of them, I'm sure, up in your area, and they'll set you up properly. And
Do they go off equity, or do they go off of total value of the asset? Because I've always thought that was interesting. Like,
it's going to be the total value of the assets, and it's going to, but
Okay.
as far as like putting your properties within the trust and the mechanism and what the protection that it provides and how to go about doing that, you want to get yourself.
Who should he go to then? Since it's not, I know
Just
you said it's not
a
your
trust attorney, a real estate trust attorney that handles
Okay.
trust. There's going to be a ton of them in your area. Just look them up or ask around. Maybe get a good referral from somebody. But that's what I would tell you to do.
So a real estate attorney that specializes in trusts.
Trust, yeah.
Fair. Okay. And and that actually, that makes sense because every state's going to be different.
Yeah,
right?
and then talk to a good insurance guy too to get an umbrella policy.
Oh yeah.
So that's another one too. So I'm just going to throw that one out there.
We have that, right?
Yeah, you got a good attorney, so that's what you do. You got a good attorney that sets you up with the properties, got you the S Corporation, got you all the everything set up correctly. So, But that's another thing that you're going to want to consider, because now you're getting to the point where you have a substantial asset value. It's going to continue to grow, and you want to protect it in the best way possible. So
and you're in Rhode Island, bro. So like, Rhode Island's a small state. You can get anywhere in the state within an hour, pretty much. So I guarantee you, there's probably some good lawyers right there in Providence. That you can use that specialize in this. So
yeah, get it, and from the attorney that you choose, maybe get a good referral from him. As far as he should probably know a good insurance guy to give you an umbrella policy.
Like for me, the biggest common denominator has been finding someone that actually knows about trust. Everyone seems to have like general information, but from what I've
that's why you got to talk to a lawyer.
Right. So
That specializes in that.
Get in contact with the right person.
Hey, even if you got to pay him $25, $35, $4,500, I mean, you're talking, you got a couple $1 million worth of assets. I mean, it's time.
It's worth it.
It's time.
Yeah.
Right, it's worth it. And now my last question, gentlemen, before I let you go. Now, once I do that, will I still be filing a Schedule C for tax returns, or will that all change?
You'll still it won't change. It's just going to be it's going to be under a trust, but you're still going to do the Schedule E at the end of the day. That's still all going to fall on that same rental schedule. Yeah.
Good questions.
It doesn't change the tax.
So the only thing that changes pretty much is the entity.
Yeah, it's just the protection that you're getting for it.
I understand. Well, thank you so much, guys. I highly
welcome.
appreciate your time, and thank you for what you're doing.
No worries, man. Good questions.
Thanks, man.
Yes, very specific, but still very good, because trusts are definitely something that people want once you start acquiring some, real assets. Good work, man. Well, 5 properties though. Who's up next? Last one we'll do here.
All right. Yes, we have 6690. You are up. 6690. You are up.
Hello? Can y'all hear me?
Yeah, what's up, man?
We got you.
Hey, please allow me to say, first and foremost, Myron, you are a national treasure, and thank you for everything you do. And please don't take this the wrong way. I don't know how in the hell y'all, you and a couple other people are still alive, because you talk about things you're not supposed to talk about, and but you're a national treasure, and I appreciate you more than anything that you could ever understand.
No worries.
My question is for the tax guy. I believe your name is Steve. If I'm correct.
Yes.
Yeah, Steve.
Go ahead. Shoot.
So question. I'm going to be a registered plumber in about 4 months.
Excellent.
And I'm going to make a lot of money.
Excellent.
And I was considering not paying taxes simply because of I'm not trying to get if I'm saying too much, please tell me to be quiet. But I just don't want to pay for. I don't want to say too much, because again, I don't want to talk about. I don't want to pay for shit that's going on overseas. I don't want to pay for a lot of things. After everything was exposed with the Epstein files and just a whole bunch of shit, I just don't.
Bro,
I don't want to pay taxes.
Look, I'll keep it 1,000 with you, bro. You're gonna have to pay taxes unless you renounce your citizenship. There's no way to avoid taxes, dude. It's two things are guaranteed.
I'm not saying to avoid it completely. I'm simply saying I don't want to pay tax. I want to stop paying taxes until shit is changed. I want to do it as a form of protest. I'm not gonna give you money to hide your criminality and all your bullshit. If I'm gonna pay taxes, I want it to be to go back to the American people for the American dream. You know what I mean? And that's just not happening right now. So I'm trying to ask, how can I not pay taxes as a form of protest?
Listen,
if that's
bro.
even legal?
Listen, bro. Until you made the rules, nigga. Bro.
Just make your money. Pay your taxes. File them on time.
I love it. You want to be a freedom fighter, but
yeah, bro.
It's a noble.
Yeah, because if you don't pay them, the boys are gonna show up.
You're going to jail.
Yeah, you're gonna go to jail, bro.
You're going to jail, bro.
You gotta. I get it.
I mean, there's a way though, but you gotta renounce your.
Yeah.
You gotta be a non-citizen.
Yeah.
Again.
Yeah. No. Yeah. If he doesn't want to pay any taxes, he's gotta renounce his citizenship.
I mean, you can do that, bro.
No, again. I just don't want to pay taxes.
The only problem is you'll get picked up by ICE.
I'm all about taxes.
He's a plumber.
I'm just saying I don't want to pay for this bullshit.
You got to do the services.
The best you can do, bro. You got 2 options: either A, you renounce your citizenship, don't pay taxes that way, or B, you can mitigate your taxes by buying assets like real estate, investing in your business, and finding. But you're gonna have to pay taxes to some degree, bro.
And it takes years to renounce.
You can mitigate it, but you're always gonna have to pay taxes, bro.
In life,
unless you renounce your citizenship, which it doesn't sound like you want to do that.
No. I love being American. I just don't like the fun on of the government right now.
I understand.
That's just, it's not constitutional. No. Like I genuinely believe that ever like when that whole situation when that went down, and then after all the shit that happened, that's when Americans really should stop paying taxes. Like,
well, bro,
you're doing too much.
You're actually very
like,
funny, man.
Yeah.
It's good.
Yeah, and look, bro, you know they're gonna tell you that like only 1% of the tax revenue actually goes to foreign aid. So like I get it, bro. Yeah, it's not much, man. At the grand scheme of things, it's just that 1% that we send over there has huge geopolitical ramifications, which is the problem.
Yeah,
the
that's my point, and that's my point. Like I want to fight the system some way. I don't know how, like spreading awareness or whatever, but I want to do something like I don't want to be complicit in
donate to the best
murder,
way that you can help,
I mean?
bro. Donate to charities that help guys. That's the best way if you actually want to, do something tangible that's actually helping the people that are being oppressed. Yeah, well,
yeah,
that's the best way to do it, dude. Protesting taxes is just going to put you in jail, and you won't be able to help anybody. So, buy assets, limit your tax liability, and then donate to charities.
All right. Thank you, Myron. Thank you, Fresh and Fit and all y'all. Like, I love y'all. I appreciate y'all. And yeah, again, Myron, national treasure. Stay safe, my brother. Please, like, carry that strap when you on them campuses. Please, bro. Please.
Only if I can legally. Sometimes a lot of campuses don't allow it, man. So, all right, bro. Thank you. Okay. We got some super chats as well that we got to read.
Yeah.
Haven't done my taxes on a single member LLC since opening it. It's been 5 years now, bruh. I'll open an LLC and start purchasing tax deeds, but haven't had any luck. I have no revenue at all. Will I get in trouble? Well, he has no revenue, so.
You have no revenue, so don't worry about it. I mean, I would probably try to shut it down. Maybe, have your tax guy file a final so it's out of the system.
Yeah.
Yeah.
All right, who's up next?
That's a good thing then.
Guys, smash that like button for me. My S Corp business didn't work out as I thought, so I pivoted to crypto and stock trading and made some money. Can I file my crypto and investment taxes on this S Corp? If so, what forms should I take for my crypto taxes, my Coinbase and Kraken wins losses sheet? Or is the Coinly tax report enough? Okay, lots of
Do not
questions there.
file it on your S Corp because you're just adding an extra layer of complexity that's not going to help you in the tax-wise. It's still going to end up in the same spot on your 1040 anyway at the end of the day. So that's just asking an extra layer of work and complexity in filing. So do not do that. It's not worth it.
Guys, we're sitting at 629. Let's get to 1,000 likes, man. Keep smashing the like button. Who's up next?
T-Dog.
Steve. I'm 2 out of 4 exams done with my CPA. I'm working full-time in industry and accounting, have about 2 years of experience, but I want to start my own bookkeeping/tax fractional CFO advisory business. I'm not trying to be in corporate. What should I do?
Go ahead and start it. Like, start the sooner the better. There's a lot of money. There's a lot of people that need help with that stuff. I don't care if AI is coming out. AI is just going to help you do that job better and quicker and easier and make it more profitable. So just do it, because at the end of the day, there's a lot of clients to be had that need your help. So just get it started.
All right. Hyman Slayer. My roof needs new shingles for our total repair that will cost at least $10,000. Can I claim this as a depreciation expense on my taxes?
It's a repair, so you could do it on the repairs and maintenance and just deduct the whole amount.
All right. Boys. Steve, good to see you back on the show. Always giving us the knowledge. Thank you. Question: is it better to pay yourself with owner draws as LLC, or pay yourself a tax wage and do owner draws every now and then?
So yeah, you could do owner draws, but you call them like shareholder distributions. If the LLC is a sole member, the problem is you're reporting that on your Schedule C of your 1040. So everything is subject to whatever profit you measure. The profit, you don't measure how much money you take out. So let's say you run a business and you make $100,000 profit, and that profit's sitting in your bank, and you didn't withdraw it and pay yourself. You still owe taxes on a $100,000 profit, whether you took it out of the bank or not. That's so now you're talking about an LLC. So if it's an LLC that you converted to an S Corp, then you got what's called shareholder loan, shareholder distribution, and then you could take that out tax free. You're still measuring your income the same way and reporting it on your 1040. Or if you didn't become an S Corp, you're going to file it on a Schedule C, and you're going to pay 15.3% self-employment tax on there, whether you withdraw it to yourself or not, just like paying yourself a salary. So I would do is take the LLC. I got a book on it. It's called you go to my the bio on my Instagram. It's called A to Z LLC to S Corp, and turn your LLC into an S corporation, and then take whatever amount that you deem is reasonable. And whether let's say you're making $100,000, you could take 25 grand of it and deem that as salary to yourself and pay 15.3% on that, and then save on the other 75,000. So that would be my advice to you.
All right. That's the last one here. All right, we got coming up next. What we got? Abo again says, my CPA forgot to file an extension for my taxes of 2024 when I filed last year, and I had to pay the IRS a fat penalty for his mistake. This was after I kept reminding him to do it too. Besides firing him and smacking him upside the head, is there anything I can do to get that money back?
Yeah, what you can do for that particular year is send the IRS a letter with the original notice that you got if you still have it. Unfortunately, you pay it. I tell my clients, don't pay it because it's harder to get the money back once you pay it. I tell them, don't pay it. Let's file a letter. It's called an FTA waiver. I actually have a free resource on right now that you can go in there to learn how to exactly write the letter. It's for free. You go onto my Instagram, and I have free resources in there. One of them is how to write an FTA letter to the IRS. And you're going to write them and say, hey, I paid this. I'm entitled to a first-time abatement. That's what FTA stands for. And they will grant it to you. They might make you fill out they'll send you a form to say, okay, if you want it, we can't send the money to you, but you got to fill this form out. I forgot what the form number is. And then you request the refund to be sent to you. Too bad you paid it already. But yeah, go on my Instagram, go in there. It's called Free Tax Guides, and one of them is the FTA waiver, and just follow it. It's got the instructions. It's for free, and you can get that money back.
All right. Anonymous says, hey, Steve, would you ever cover trading tax and how to record my trades properly for tax season? That's good, actually, trading tax for traders.
Yeah, definitely. I could definitely do that. And then it's kind of similar to crypto too. So there's some nuances with crypto that are pretty cool too that I can show guys, like, at the end of the year, harvest your losses and then buy your shit back if it's down. Like, like in 2025, people had crypto that was down.
Yeah.
You could sell it right at the end of the year and then buy it back and then recognize that loss. So you can't do that with stocks because it's called like wash sales. So you got to wait 30 days. But with crypto, it doesn't apply.
Oh, wow.
So a lot of people miss that opportunity. They're down on a crypto and then they decide to hang on to it. I'm like, just sell it, buy it back, the January 2nd or 3rd at the same price or whatever, roughly the same. And then at least you have a loss to recognize against your other gains.
All right. Any more? But yeah, man, I kid you not, that thing about the property wait, again, if I had property, I could write off 100% all the depreciation either up front or prolong it.
Yeah,
over
we'll
30 years.
separate it, and we'll separate the pieces that this amount goes to 5 year, this amount goes to 7 year, this amount goes to 15 year. You could take the bonus depreciation on there, or you just figure out. Yeah, so
that's pretty good.
I think I've already done that with yours already. I got to go.
So,
back
okay, so I'm good.
I think you're already covered.
Great.
Oh, I'm sorry. I think I've already handled that for you because I've been it's been a few years now.
Yeah,
yeah,
5 years. Oh,
and then you did a major renovation like a couple years ago too. If I
yeah,
recall.
for the roof.
Yeah,
Roof
but other
and
stuff too.
Roof, plumbing, everything. Yeah.
Everything. Yeah. Okay.
All right.
Yeah.
All right, two more here. Mr. Clap Cheeks. Obama was a starter king and became president.
Yeah. I mean, it's a smooth talker.
Yeah.
Persuasion. J.R. Sedgwick says, I've rented a property, but it's not an LLC. What should I do to help myself to lower my costs as far as taxes?
So that turning it into an LLC is not going to have a tax impact. That's going to give you an extra layer of liability protection, and hence the name LLC. That's limited liability company. So it gives you, in case somebody slips and falls on the property and wants to sue you, it limits their ability to sue you and not get after your personal assets. It's basically limited to the value of that property. So you're kind of separating your personal into the limited liability. So it just gives you an extra layer of protection. But you got to open up a bank account for it. And
it also gives you a platform to track your expenses, track your costs, income. So it's a way to organize yourself in a way as well where you can
separate your activity from your personal bank account.
Anybody else?
No, that's it.
Cool. So guys, go check out Steve. It's Seeing Beyond the Numbers. We've worked with him for years. I mean, 6 years plus at
Best
this
in
point.
the game.
One of the best in the game. Matter of fact, actually, we get off after we get off here. I'm actually going to give him my tax stuff. I tell you guys all the time. See, we practice what we preach. I use, as you guys know, I use credit cards based on what I do. Right. So I have a real estate credit card. I have a Fresh Fit credit card. I even have a Myron Gaines X credit card now. So, all the stuff that I do, I charge it. Why? So at the end of the year, I can just give it to my accountant and he has everything. And then he just knows all the expenses right then and there because I separated by card. So, guys, this is the importance of keeping your stuff together, having a good accountant, and track your expenses if you want to be an entrepreneur. Especially, this is the beauty of in using credit in the process. It's you kill many birds with one stone.
You need somebody like Steve in your life to help you out.
So, and even if you guys are W-2 employee, and you're transitioning like I did, he's the guy that you want to have.
Yeah.
So, and then for all you guys that are ambitious, want to make some money on the side, that's a huge opportunity where you guys can get a bunch of experience free of charge and make some money on the side. So if you do have a full-time job, you don't have time like that, this is something that it seems like you can kind of fit into your schedule more flexible.
Link is in Castle Club as well as OSS and as well as Suey Network.
So
all in there.
Yeah. All right. So Steve, anything else you want to tell the people where they can find you or any last upcoming projects?
I just guys, get on there. I got this opportunity for the R&D tax credit that's been expanded under the One Big Beautiful Bill. An opportunity. Our average commissions are about $20,000 to $30,000 on conservatively. So if you're making anywhere from 20% on that, that's a substantial. You're making $4 or $6 grand, and it's not a ton of work. But we want a group of 20 guys that are very motivated, very ambitious. They want to grind. They want to make money, and we will set you up for success. Give you the tools and the training that you need for free on that. So I hope you guys will take advantage of that. I'm looking forward to it, meeting you guys, and then working with you guys on a one-on-one basis.
Yeah, win-win situation.
Appreciate it. Thanks for having me, guys.
No worries, man. It's always great to have you.
pleasure.
Anything else before we?
Last one here from 96.
Okay.
Steve, I wanted to know about a path from military to real estate by house hacking. What obstacles I have to deal with along the way?
House hacking? I'm not sure what he means by that.
He means as in buying a home and investing it. Well, basically buying a home as an owner, but renting out other parts, so he can go ahead and take advantage of the low, down payment when you buy it as an owner.
So one of them, and I think it kind of relates to the question that guy had that was making, he didn't want to, report the $30,000, is you're using your primary residence as a way to earn rental income. And then the problem is going to be you're not going to have a lot of expenses on it. So you're going to have to choose one or the other. You want to keep it a true primary residence, then everything you're collecting is going to be just plain rental income with not a lot of expenses to offset against it, because you can't really use your primary residence as a rental activity, and you can't have it both ways.
Okay, so even if it's you buy a duplex or whatever, still.
Now, duplex is different because you could separate that. But
There
if
you
you're
go.
doing rooms within your own house, like that other guy who's doing
With the
rooms.
single family home shit, yeah.
Yeah, that
then you got to start getting sketchy.
Duplex is a different story. Yeah, that
Gotcha.
you can actually split, and you can keep it clean, and you can actually.
So I tell you guys, when you're gonna house hack, man, try to do it with a duplex at least.
Yeah, that's
doing it with single family homes creates problems, and we didn't even talk about state and city ordinances where you might get fined by your city or state for using your single family home as like damn near an apartment complex. So that's the problem when you rent rooms, man. So you're way more protected if you have a duplex or a triplex, from getting the benefits and the liability. But if you want to do a single family home, house hack the single family home, then get tenants in there, bruh. And then also keep in mind, since you have this shit kind of off the record, and if a tenant doesn't pay you, you don't really have legal recourse to fight them. You're
screwed.
Plus, you got to be careful too when you invite people in your house.
Yeah.
Some states have a little bit New York State. It's you can't just kick them out on the street.
Yeah.
There's
all
of a sudden they have
They get
more rights
mail
than you,
there.
and they can squat.
Yeah.
In your own freaking house. So that's a little scary. So you got to make sure you're really vetting these people. They're people that you can trust.
Yeah, there's laws that will let them squat, especially if it's wintertime. Oh, bro, you're going to be stuck with them. So could you imagine you got a single family home, you got someone in there, you moved them in, they paid you rent for a month or two, then they stopped, you try to get them out, you try to, call the police, everything else.
Change the locks, all that stuff.
Bro, and you can't get them out.
Just things to think about, yeah.
Think about
it's a
this.
huge risk, bro. It's a huge risk. So
guys,
get a duplex, guys.
Think about this.
Yeah, facts.
Yeah.
Anyway, guys, here's Steve. Go check him out. Seeing Beyond the Numbers. And, jump in the program if you guys want to make some side money. There's no risk to you at all. And love you guys. We'll see you guys in a little bit. Peace.
Peace, guys.
Appreciate it, guys.